Good afternoon, ladies and gentlemen. Once again, welcome to Blockchain Fest Singapore 2022. How's everybody? Wow. Let's do that once again. How's everybody? Only one person responded. Everyone's busy on the phone. You should ban mobile phone when you come to a conference. Okay, let's do this. Let's make you guys all live up a bit. All right, so it's real simple. By the way, my name is Sugan. Hi, everyone. Sugan, my name. Okay, so when I say hi, I need every one of you to say hello. When I say hello, I want to say everyone to say hi. Can you do that? Wow. I don't even hear the cricket sound, man. It's like so quiet, total silence. Let's do that once again. Hello. Hi. Hello. You all forgot what I'm supposed to say. I say when I say hello, you're supposed to say hi. How are you guys at a conference and you're not paying attention? When I say hello, you say hi. Okay, hello. When I say hi, you say hello. Hi. Hello. Okay, this is live, you guys. So I think you're after makan, after eating, and after having your lunch, you're a bit relaxed mode. Okay, so we're going to start off with our first panel discussion for the second session, which is called NFTs and GameFi Drive Mass Adoption of Blockchain and Crypto. So let's welcome our moderator, Coby Lim, to come on stage, our principal trader of Asia at Floating Point Group, our panelists, Alfonso, Cholo, Maputol, CEO and co-founder at Play It Forward. Hey, you guys clap hand lah. Maybe next year we have a screen update that says applause. Our next one will be David Yin, President of Web3 Gaming, iCandy Interactive, and CEO at Storms. Nice. Faye Young, founder of Unschul Private Limited. Rohan Juneja, crypto native business led at Fireblocks. Very lively crowd, you guys. Maybe next year we'll start have a screen down here that says applause to help them assist. All right, so we're going to start with our first panelist. Take away the mics right beside you at the sofa. You can turn it on. Just press one time, it'll on. All on, huh? All green. Okay. All right, take it away.
Okay, good afternoon, everyone. So I think here we are having I'm the moderator, Mr. Coby Lim. So I'm the principal trader of Asia for Floating Point Group. So we have our headquarters set up here in Singapore. Essentially, what we do is we provide secure and like multi-exchange, multi-market access to cryptocurrencies for institutionals. Yeah. So we'll start things off. Let's have just a quick round of introduction from our panelists over here. So to my right over here is Cholo. So we'll just take it off.
Sure. Good afternoon, everyone. Very happy to be here. My name is Cholo. I'm the co-founder and CEO of Play It Forward DAO. So what we are basically is I guess a GameFi ecosystem, which comprises a couple of parts. One is a large-scale gaming guild with about 3,000 players spread out across ASEAN region. And then we also develop kind of software and tools that allow similar guilds like us to scale and manage their operations more efficiently. So very happy to be here and look forward to the conversation.
Thanks. Hi, it's David Yin here. I'm the president of iCandy Web3 Gaming, as well as the CEO of Storms, based in Singapore. So iCandy itself, we're one of the largest Web3 gaming studios in Southeast Asia and Australia and New Zealand, listed on the Australian Stock Exchange, and Animoca brands are one of our largest shareholders. So we are looking at building about 10 Web3 gaming projects over the next couple of years. So yeah, very happy to be here as well.
Hi everyone, I'm Faye. I do art auctions here in Singapore for mostly emerging artists. And my interest in the crypto space is looking at how NFTs can be utilized by traditional businesses.
Hi everyone, I'm Rohan Juneja. I'm a crypto native business lead at Fireblocks, where I own the product strategy and roadmap for our crypto native segment. I've been in the space for slightly over 5 years now and really never been more excited about the prospects. Very excited to be here.
All right, thanks a lot for the introduction. So I guess we're here on a panel discussing primarily on NFTs and secondly also on GameFi. So those are one of the two main pillars in the past 1 year which we've seen driving mass adoption not only within the region, but it's globally as well, within the developed and I would say the developing nations, quite importantly. And yeah, so I think NFTs. I think many of us may have been, like involved in NFTs, own some NFTs, like maybe a Bored Ape or even CryptoPunks. But I guess it really goes beyond that by quite a bit. Just maybe let's hear a bit from the panelists. Like, what do you see? How would you describe an NFT? Maybe from Faye, perhaps.
Sure.
Yeah.
So, to somebody who's new to the crypto space, I would say that NFT is a transactional record that denotes what the ownership and also provenance of a underlying item.
How about maybe a bit more on like the value? Like do you see any? Where do you see its intrinsic value to be in?
So if we're talking about intrinsic value in the traditional finance sense, there is really no intrinsic value for NFTs because there's no cash flow. But an NFT's price or value should be based on its underlying asset. So looking at how to evaluate its the asset it represents as well as the utilities it represents and what the value is to the users is how we would look at how to price NFTs. Anything to add?
Yeah, from my side and our view about NFTs is that it has tremendous potential across the board, from identity to collectibles to communities, right? And what we're seeing is increasingly corporates and brands are waking up to that. And they're realizing that this is a great way for them to engage their communities, to engage their users, to essentially monetize the intangibles on their balance sheet. And they're seeing this as a way to get a better understanding of who their consumers are, how they consume, where they consume, and what their behavioral preferences are. So overall, I think the next wave or the adoption around NFTs is that's what we're seeing, where it's coming from, and that's where I think also the value of an NFT is derived from. From a user point of view, you can compare it to what is the intrinsic value of having a membership to the Raffles Club in Singapore. So.
I think from a gaming standpoint, and I guess there's NFTs in gaming are, I guess, slightly different than art NFTs or other NFTs with other use cases, in the sense that in a game context, an NFT is essentially potentially any item or any object in the game that you can tokenize. And what the power there is that NFT, because of interoperability and composability, potentially has use cases beyond just that one game. I guess the best example of gaming NFTs and the most famous one is Axie Infinity, where it essentially allowed all these multiple Axie pets that initially had only a use case within that game. But if you follow the news, they recently announced the Axie Builder program, where suddenly these NFTs have use cases beyond just one game. And it's quite powerful when you think about in traditional Web2 gaming, World of Warcraft sword only has use in World of Warcraft. What if you can take that sword and has value in another game like Skyrim? And I think that's where the power of gaming NFTs for mass adoption really comes to play.
I guess gaming is definitely one thing that we've seen, a very vibrant use case that NFTs has, been involved in. I think besides gaming, GameFi, what other, infrastructure, what other use cases or tools do you see that, NFTs being useful or applicable for? Like, any comments on those?
Did you say what other use cases do you see for NFTs?
Yes. Well, be it for NFTs or revolving around NFT tools and platforms being built, for NFTs. Do you guys see any within the institutional side or even the broader market?
Yeah, I think from our side, what we're seeing now is that a lot of retail platforms that were initially engaged around the buying, selling, holding of maybe cryptocurrencies and tokenized assets are now looking increasingly as offering NFTs to their users. Also, as a means of getting on the NFT bandwagon and partaking somewhat in the speculative nature, but also helping them interact more with the utility side of NFTs and be part of the community that the NFT represents, or use the utility that NFT is providing. So we're seeing a lot of, from an infrastructure point of view, a lot of questions coming our way about how do we go about offering that service to our customers, wherein they can come and buy NFTs to us, and that's somewhat of a more centralized infrastructure, but at the same time allow them to access all these other parts of the NFT ecosystem that they want to, which could mean going and using that NFT attaching it to your Instagram profile or your Twitter profile or accessing a Discord community with that. So that's what we're seeing on our side right now.
So just to add, we also see a lot of brands use NFT to engage with their customers. So it opens up a new channel for brands to reach out to their customers, as well as a lot of HRs have been issuing NFTs because of this underlying value that people can relate to it because there is an asset or there is a utility value to NFTs. So I've seen companies issue NFTs for their events and tier memberships. So these are some of the utilities out there for NFTs right now for corporates.
Yeah, so just on that one as well. So we're working heavily with brands as well in terms of minting NFTs and connecting the NFTs to physical, whether they're shoes or drinks and so on, for example, and that obviously there's a strong use case in terms of customer loyalty, engagement, and acquisitions as well. So we're working heavily with brands in that space, and then. On the GameFi space, very similar to what Cholo mentioned, for us, there has to be a very strong utility attached to the NFTs. And those NFTs, whether it's a virtual shoe or it's an NFT for ownership of land, or you can have battle arenas on the land, costumes, shields and battles and armory and that sort of stuff. But we believe very strongly that there has to be some sort of a utility attached to it for GameFi itself. Yeah.
Well, I guess onto that vein, well, maybe just a quick one. Are you guys currently looking at any particular NFT project that may just arise? Like, for example, I think recently there's this Step N. I think that's one thing. Like, you guys, any specific ones that you may be looking at with potential? Yeah.
Yeah, I mean, I'm a heavy Step N user. But obviously the GST and the GMT token prices have come down a lot.
Oh, yeah.
So I do use Step N every morning for 25 minutes. And I think that Step N is a prime example of a Web3 game or GameFi game that has significant utility, and it combines the physical world and the virtual world exceptionally well, right? Because you have to buy the virtual shoe, and once you buy the virtual shoe, you start walking with your normal shoes, and you get paid for walking X minutes a day itself, right? Now, sure, there's going to be volatility in the utility tokens and the governance tokens every single day. But for me, that's not that important, because for me, there is a significant utility that I get fit and healthy every single day. And if I can do this for 2-3 years, and I'm kind of forced to do something that benefits me and I enjoy it, I think that's kind of the future of NFT and GameFi itself. Yeah, I bought my sneakers at quite a high price, and overnight it's kind of gone down a lot. But am I too worried? Not really, because I'm in there for the long haul. Yeah.
I think just to add, and I think this is really an indication also of how quickly the space has matured, especially GameFi, where you're quickly seeing a lot of traditional Web 2 developers, I guess David can attest to that, really looking at the whole GameFi NFT gaming as an enabler of really continuing to grow a community and making that community very sticky. And what we're really excited about is the emergence and the arrival of AAA game studios that will bring games that are fun first, and then, but then as a player, if you commit to it, if you play it, if you put in the time to get better, then maybe you can earn. And I think that's really going to be the evolution of play to earn, where it's a good kind of coexistence of people who come into the space to earn, including scholars that guilds like us manage, but also that player that just wants to play, get really good at the game and try to climb to the top of the leaderboard, or just really enjoy what the game has to offer. There's space in the whole ecosystem for multiple player types, and we're really excited about the arrival of that other archetype of player that's not just the earner.
Yep. But what do you think are some of the blockers that you see in the industry? You know, like is it going to prevent people from prevent mass adoption from really happening? Because I see now like Step-N, that's one thing where it marries Web3 and the physical world. You know, I think that's a really great proposition where it goes towards mass adoption. But as we move along, I think there'll be many waves that come along. But what do you guys foresee as one of the major ones that that obstacle that the industry has to overcome before you reach that point?
Maybe I can take a shot at that. So when I look at about, let's say, the GameFi industry today, right? And if I try to map out on a quadrant all the projects right now between, let's say, sustainable economic models on one axis and gameplay on another one, I think we've done really well, or we focus most of our energies right now on the economic modeling side. And on the gameplay side, I think there's a whole lot of more work to be done. But what we do have today is like a proof of concept, and that has enabled a lot of capital, talent, and interest to flow in the space. So I'm really excited about doing better on the other axes and seeing more and more projects coming in, maybe with the lack of a better word, Web 2 gaming companies entering the space, or even the newly funded large brands in the Web 3 space building better gameplay. I think that's something that's very important to drive mass adoption. The second place where I think we can do much better is in terms of taking out the friction that people go through to participate in the Web3 economy and GameFi specifically. I've tried multiple projects, and I have to say I stopped using them after a while. And part of the reason is you're made to jump through all these hoops, and for that audience that goes beyond your crypto native sort of retail audience that has been in this journey for the last 5 years, or is trying to come in just to make sort of minimum wage in places like Vietnam or Philippines, to go beyond that and actually attract retail gamers or other sort of entities. I think what you need is a more seamless experience, and I don't think it is going to be completely decentralized or centralized. We think it's going to be somewhere in the middle, but being able to have that infrastructure available is one of the blockers, I think.
Just to add, I think security, we've come a long way, right, in Web3 for the last few years, but security is definitely an issue. Auditing is an issue, but at the same time, technology itself is a bottleneck because it's cumbersome. I think for mass adoption to occur, we would have to make it invisible to people in our kind of incorporate it into our day-to-day lives. And that is difficult for the Web3 technology today.
Yeah, I think, I mean, obviously I agree with both Rohan and Faye here in terms of the barriers to entry. I think from a gaming perspective as well, so, what's a big barrier sometimes is the price, the entry price, in terms of the NFT prices itself, right? So if you look once again at StepN, it was at $1,500 for a shoe or even $5,000 for a shoe. But what they've figured out there is potentially in the future, it's a rental model, right? So for new users coming on, they can get the shoes for free and they just pay a revenue share to the owners of the shoes itself, right? Or then you have these things about having guilds and trying to reduce the pricing of NFTs and so on. So I think if that barrier is thought of really well and it's reduced in terms of pricing, it makes the entry point a lot easier there. That's the first thing. Obviously, the second thing as well is, for me, I strongly believe in trying to figure out how do I convert Web 2 gamers, traditional Web 2 gamers, into the Web 3 space itself, right? And what we're trying to do over at Storms is trying to figure out whether we can come up with a game that, first and foremost, to Rohan's point about barrier to entry in setting up the wallet and all that sort of stuff, is we don't care about that. We go for the Web 2 gamers, make it a nice and simple experience for Web 2 gamers, frictionless. They can join straight away, play the game itself, and that game would be exactly the same in a Web 3 environment. So then we'll say to these gamers, oh, by the way, you've played this game for 2 days. If you move into the Web 3 environment, you would have made X dollars. And we don't focus first on making money. Let them experience what a good game is, right? And then we help them move over and migrate over to the Web3 space. So we're just trying to figure out the mass market adoption on the Web 2 space first to bring them over to the Web3. Yeah.
No, I think I agree with all the points. And really that's where we see the biggest challenge is still onboarding. And especially for players in the developing world where most of them don't have bank accounts, to then ask them to create multiple wallets and go through multiple layers of friction, finding gas fees to fund their wallets. It's very cumbersome, and I think it becomes an impediment. And sometimes there's also bad actors that if they get scammed, they just lose faith. And I think that's where the industry needs to spend a lot more time on fixing, making the UX for players as seamless as possible. And if you want to go from kind of like a Web 2 kind of context and go explore DeFi, that's also available. But I don't think that defaulting to this high friction onboarding process is the way to go to increase adoption.
Just one thing I'd like to add to that. So when we talk about the experience for the users, I think we also need to think about the developers and the teams building these applications. I think what we're seeing right now is, sort of what we saw back in 2016 to 2018, is a lot of developers and institutional participants in the space were trying to interact, but they did not have institutional level products available to them. And they were essentially using retail grade toolkits with retail grade security. Now, in Web3 today, we're seeing something very similar. We're trying to build for like really mass markets, but the sort of toolkits available out there are still very retail grade. And that's something like we at Fireblocks are also really focused around and that's what we are trying to target through our Web3 engine is to build out a suite of products and services that developers can use to essentially build applications, platforms, projects that have essentially security, scalability, connectivity right out of the box. I think that enabling these developers to build those sort of games is going to be increasingly important.
Yeah, so I think beyond the mass market, just any thoughts on maybe like institutions, for example, financial institutions, or even the other non-gaming kind of industries, like any insights on those?
Sure. So I can speak to maybe financial institutions investing in NFTs. It's not happening because there is no intrinsic value. So if we want to look at bigger brands, looking at how to engage with our customers, NFT is a new channel. But in terms of how financial institutions invest, NFT wouldn't be appealing to them at this stage.
Yeah. Okay, so I guess now I think everyone can agree that I think one of the main drivers is NFTs, and specifically within like the gaming lifestyle, so gaming and lifestyle arena itself. So I think for GameFi, quite interestingly, we've seen Axie rise from last year and all its game popularity, not only in like Singapore, but it's one of the key products in certain developing countries also. There's like quite crazy amount of adoption over there. But I think in terms of the whole GameFi model, what do you think could be a long-term sustainable kind of model? Because what we see now is there are a number of products. Yes, you can play to earn and all this, but in terms of it sustaining in the long term, still a bit unsure. Just maybe any insights on those?
Maybe I'll start from a guild context, and really coming from a guild where we're managing a lot of players coming from the developing world. I would say Axie was a watershed moment around gaming, and I would say that it's been a very interesting ride, I would say. But what it's shown is that the model works, and that gaming is a way to give people from underserved communities the ability to earn an extra income. I would say the more sustainable model is that it can't be the game is only dependent on that player population. And I think the developers now are doing, I think the developers around the whole GameFi industry are doing a great job trying to address that imbalance. It will take time. I think it's like Rome wasn't built in a day, and I think GameFi is still very much in its early stages. And I would say that there's really good builders out there. They're trying to solve this problem. It's not an easy or a straightforward solution, but I guess with all the people developing, it's just beyond the horizon. So I think a sustainable business model will emerge where I think it accommodates all types of players, not just earners. Earners will be one layer of players for sure, because now play to earn is a real movement. But then there's also going to be players that are like really pro players, just want to get really good, get really skilled, skill up. There's going to be players who just want to contribute to the economy. If you look at like complex games like World of Warcraft, MMORPGs, there's different types of players and they have different objectives. And the successful GameFi projects in the future accommodates for all those types of player personalities.
Yeah, I agree 100% with Cholo. I mean, obviously, I think all of us should be proud of Axie Infinity as a Southeast Asia success story, right? And it's kind of inspired the world, right? I think what's really key in terms of sustainability itself, because for me, the most critical thing about building a game is on the economy of the game itself. How do you control the demand and supply? It's basically economics theories within the game itself to ensure that, number one, hyperinflation doesn't happen, where the NFT prices and the token prices skyrocket, and only a few people make money from that, and all the new users are going to struggle for that. And if you look at Axie, the prices have come down a lot, and same with StepN and so on and so forth. So for me, the fundamental rationale is got to understand the economy of the game. How do you burn the tokens? How do you burn the NFTs? How do you ensure that hyperinflation doesn't happen? How do you stop the over-reliance on having new users coming on board all the time so that this perception of a Ponzi scheme keeps on going on, right? And this has to be solved in the longer term, right? So for me, the economy of the game and figuring out how that works is absolutely critical in the longevity of the game itself, right? And I think that the market dislocation in the last 3 weeks has honestly been good for good quality game studios in the world, right? Because now there will be a heavy focus on quality games with studios that have a track record in building games and not kind of game studios that were formed overnight. Let's quickly get NFTs and tokens out there and giving a bad name to the industry, to be honest, right? I mean, now it's about credible teams, great games that have thought their game economy out really, really well. Yeah, I think that's my view there. Yeah.
I agree with what you guys said, but just to add, I think for GameFi and for any product in Web3, it's still quite new, still quite early. So I think GameFi itself is trying to build a different business model with different user bases than traditional gaming industry. And what they're seeing is that today, P2E games, with the crash, that once the earning potential is not there anymore, your entire ecosystem that you've built crashes. So how do you make that more sustainable? I think is what everybody in the GameFi industry is trying to solve.
I think you guys covered most of it. Sustainable economic models, good gameplay, sustainable. One thing I'd probably add is community. I think that's really important. Building a vibrant, strong community around any game is as important as the economic model or the gameplay itself. I mean, coming from like being a gamer back in early 2000, play online through the night with like really high latency. It was almost it was all about being a part of a community and the same crowd of people who came in, logged in every night and played together. So I think having that sense of community or building it is also very important.
I think moving forward, just looking the next 1 or 2 years, what do you guys see as a possible big and upcoming trend? I guess, music NFTs are being talked about, but hasn't really taken off full scale yet. I think in the fine arts and all this. So any thoughts about that? Like, like on some of the possible future trends that we may look at, like be it in GameFi or, just purely within NFT, within the other,
Yeah, I mean, from my side, definitely more on the corporates and brands bit. I think they're going to increasingly interact with their existing user base using NFTs and essentially engaging them in activities and engaging them in trying and interact more with the brand. The other place on the GameFi side, I think we're going to see a lot more Web 2 gaming studios bring in elements of play to earn, bring in elements of Web 3 within their existing games or maybe new games.
And what I've seen is again, brands using NFTs to build their communities, engage with their customers, as well as hard asset-backed NFTs, NFTs that represents a piece of an asset. So those are the things that I see, and as well as NFTs in tiered memberships for DAOs is also what I'm seeing.
Yeah, I think for me, there's probably two key trends that I'm hoping to see in the next couple of years. I think the first one is this Web 2 gaming space that Rohan brought up. So at the end of the day, right now, the AAA game studios are making billions of dollars, and they still are. And they're still growing at double-digit growth every year, right? But eventually, there's going to come a point in time where, as a gamer myself, I have limited time to play games, right? So do I play a great game in Web 2 space and love it and pay money to get in-app items and, grind and go through the different levels of the games? Or do I now play an amazing game in a Web 3 space that I love playing as well, but then now have ownership and have real ownership and have the ability to earn while playing that playing that game itself, right? So for me, I expect to see more and more Web2 gamers coming into the Web3 space because the quality of games in the Web3 space is going to increase, and the studios are going to be a lot smarter in trying to capture the Web2 to Web3 movement in that space, right? The second trend I see is that I expect gas fees on NFTs to come down significantly over the next couple of years, and the layer one chains will have to figure out how to compete with some of the layer 2 chains that can reduce NFTs down to zero or negligible costs, and then recoup that revenue model through a transaction model on the volume of NFTs that come through, and furthering reducing the price barrier to entry for some of these games as well. So I see those two trends as the big ones, yeah.
The only trend I'd add, which I guess like a lot of trends that the co-panelists mentioned, I completely agree with. And I think what we're very excited about is really the metaverse. And it's the interoperability, the composability of NFTs that is going to be very powerful. So I think if you look at a lot of the criticism on Web3 games today, they say that, oh, the price went up and it crashed. But that's taking a very, I would say, narrow view on where an NFT gets value. And they just assume that it only gets value in this one specific game. But if that NFT suddenly becomes a useful asset in 20 different games, then it shouldn't be priced at this floor price. It should be priced at an index of all these like utility cases. And I think that's where I would say a lot of criticism doesn't really capture the promise of the metaverse and transferability of assets. And yeah, I think the good builders, the real believers see that the promise of that future. And I think we're very excited for that.
Okay, I think as David touched upon, the different layer ones, just maybe just one final question before we just bring it to the floor. Just any questions, you can just come up and ask one of our panelists. Like in terms of the different layer ones that we have for NFTs now, it's undoubtedly, I think Ethereum is the number one in terms of, the volume and all. Solana comes close, Solana together with Polygon for its gaming, like gaming focus. Any other chains on layer one, layer two that you guys may be, looking at, or for you guys is like, Ethereum and Solana will still lead the way in the next 2 years or so?
On the gaming side, we actually see a big movement away from Ethereum because for gaming, I think because of the amount of and the high throughput in terms of transactions, it gets very expensive very quickly on Ethereum. I think some of the higher latency chains like Avalanche, Solana, you mentioned, Polygon, BSC, those have been more popular with the game developers we've seen. And of course, also the upcoming layer 2s like Arbitration, et cetera, have been getting momentum.
Yeah, I think, the thing is, Solana at the moment, it's going through a tough time with StepN.
Yeah. It was just down last night, so yeah.
Yeah, and they've gone down to I think the last time it was 5,000 TPS, right? And they've had a few issues there. But I think it's fine because StepN is actually a public beta. It's not commercially launched yet. So they'll fix it and they'll figure it out, right? Right now, what I do see, there's a company called Immutable over in Australia, and they have a platform called Immutable X. It's a layer 2 platform. And they're, for us over at iCandy and Storms, scalability is really, really important. How fast can you scale? Can the transactions be quick? Is it secure and safe, right? So I do see, companies like Immutable really playing a really, really strong part in the future of a layer 2 chain. I'm not 100% sure whether layer 1 chains can really support GameFi scalability, and that TPS is a bit low. But Solana are massive, right? So they'll figure it out. I'm sure they'll figure it out somehow. Yeah. So.
I would say it depends on what the NFT is used for. So we've seen corporates issue NFTs for HR events, and those could be issued through Polygon or whatever is cheapest for you to mint, right? Because these NFTs are not meant to be traded and flipped. So then from a collectible perspective, if you're using the NFT, it's mostly seen on the Ethereum chain because that's still seen as the main art or collectible NFT chain.
So I guess sorry.
No, sorry. So on our side, what we're seeing is essentially people are building, one, where the audience is, and two, where they have the requisite battle-tested, scalable tools available. And that continues to be EVM-compatible chains at this moment. That's where the maximum amount of resources are available for developers in this space. Of course, layer 2s and some other chains like Solana are attractive as well. But I think for the time being, that's where we're seeing the most activity.
So I guess the blockchain trilemma is still one key thing that we really have to solve as we move towards mass adoption. So I guess with our remaining time, I think with our panelists over here, so if you do have any questions, I think from the floor, please, yeah, sure. Well, there is a mic somewhere, or I could have mine.
So, question for the panel. Do you guys? So we in the NFT community we have obviously people who are just coming from the gaming, or they were just NFT enthusiasts for flipping NFTs. Do you see people who are going to come from Web 2 or maybe even the gaming? They're going to come into the Web 3. Do you find them? Do you predict that these guys are also going to be flippers at some point in the NFT community? So are we going to actually, so I guess what I'm asking is, do you think the gamers from Web 2, when they transition to Web 3, are they going to have a different profile as a gamer in addition to just being a gamer? Are they actually going to be contributing more than just playing a game and just maybe earning, right? So how do you see that playing out as their profile expands in the Web 3?
Yeah, I can take this one first. So I think it's a great question. And I think, once again, it depends on who the gamer is or who the user is. Let me give an example. So my wife is completely clueless about Web3 and blockchain and all that. But she understood the concept of StepN. And she set up the StepN account. And she says to me, David, can you just transfer some Solana into my wallet, StepN wallet, right? I did that. And then she bought a shoe, just one shoe. She bought the NFT. And for her, she has no intention of flipping that shoe at all. Her intention is to play the game, to be fit and healthy every single day, make money from it, yeah, that's fine. But she's not in there to buy the shoe at $1,500 and then hope that in a month's time she's going to flip it for $10,000. That's just one subset of a user itself, right? The second subset is, if you're going to flip, I don't think it's a Web 2 or Web 3 discussion. It's who you are as a person, whether you want to flip or not, right? If you want to buy an orange in the market for 10 cents and you know that you want to try to sell it for $1 somewhere else, it's more the mindset of that person itself, right? And I'm hoping that from a gaming perspective, I'm hoping that the flipping mechanism is not the main rationale for Web 2 gamers to come into the Web 3 space. That's my dream. That's my wish, right? But all of us know that Web3 has a very strong investor pool as well. And investors are all about, I wouldn't say flipping, but about return on investment, trying to make money in the longer term, right? But does that mean that they're after short-term gains and flipping, right? So that's another sort of a subset of audience that is looking at the so-called flipping concept. But for them, I would think now, with the market going as is, they're looking for more a traditional VC type model. Let's be patient. Let's look at 3 to 5 years to make that money from the initial investment, but make sure the game is a good game, first and foremost. Yeah.
The one thing I would add is that if we look back at one of the very first kind of, I would say, play-to-earn games, Diablo 2, when they came up with a marketplace and their online multiplayer, right? Diablo 2, incredibly fun game, incredibly rich game, but even in Diablo 2, you had stories of these people who would farm loot and sell them on a marketplace for a profit. So I don't think that a Web3 created these behaviors. If they've been existing in Web 2 since Diablo 2 and even World of Warcraft, you have like Smurf accounts, right? Even within like CSGO. But then what you see in those games is a very rich player population where, in spite of those extractors, value extractors, the game is successful. And that's where I think Web3 will end up, where you have a very rich set of players. You have earners, you have people who just farm for loot, and then you have people who just really want to get good and become an esports player.
Yeah, I think this is a problem that Web3 overall is trying to solve, and I think it's really project dependent. So when I speak with projects in the Web3 space, I would usually ask, well, who is your target customer, right? So if you're advertising towards people who want to earn and want to extract economic values from playing games, say, because you're calling it play to earn, then you attract a certain type of personality into the product. So really, you have to think about how to build the product and how do we make the Web3 space or the products more sustainable.
Yep. Thanks for the insights. Let's have one more question over there. Yeah, sure, you can have mine.
Yeah, so my question is, if you could share some of the other use cases of NFTs other than gaming and art and music NFTs, and what could be some of the good utility for someone who wants to launch their NFTs?
So I've seen a lot of various uses for NFTs. There are NFTs for real estate, there are NFTs for gold, and there are NFTs, as in you can tokenize different types of assets, and there are NFTs for memberships, especially tiered memberships where you can govern and look at on-chain how much involvement each member has been having, as well as HRs nowadays are issuing NFTs to create separate interest groups within their corporates. So NFT itself is just a contract, right, with a token. So you can look at how you can utilize that and then attach that to your day-to-day activities or operations.
I think NFTs are increasingly becoming a representation of us and you know where we interact with the community, what are we involved in, what artists we follow, what causes we support, and it can become a platform for other entities or corporates or brands out there to target people as well. Like if you're, let's say, a Bored Ape holder and they're having a meetup in New York, as a yacht club owner, I can drop you an NFT to invite you to a party that evening, right? So there's just a whole range of utility that can be built on top of NFTs that we're just starting to scratch the surface of.
All right, thanks a lot. Okay, so I guess before we leave, any parting words for those who have yet to be introduced into the Web3 space, into NFTs and GameFi? Any words for them? Like, yeah?
I guess my words would just be keep an open mind. I think the space is so young. The rules are still being written. I don't think that in a space so early you can say that there's a tried and tested way. I think the best thing about this space is that there's no right or wrong answer as yet. So just go in, keep an open mind, find the projects you like, and contribute to the community.
Yeah, I think for me personally, and I hate to say this publicly, but I was a non-believer maybe about a year ago. And I said, oh, this is all fluff, there's Ponzi schemes, it's, you know, no gamer would ever play it, and so on and so forth. And then the last 6 months, I educated myself a lot more about the space and understood more about NFT utility cases and tokens and utilities and how games, you can actually build great games, you know, to capture this Web3 space. So I think, similar to Cholo, have an open mind, try to learn as much as possible about the space, figure out the strong utility cases. I think the utility cases now is super important, except if you're talking about collectibles, right? Like Mona Lisas and all that sort of stuff. It's more of an art piece, right? But in GameFi itself, if there's a strong utility attached to the NFT or the tokens, then it really makes a lot of sense. Have an open mind. I think that we're going through a similar .com era 10, 20 years ago. It's going to happen. It's just a matter of how long it takes to go there. Yeah.
I would say get involved with the community. Come hang out with us. It's a lot of fun. You meet a lot of creators, a lot of creative ideas, but you will pay your tuition. So just be prepared and do your own research.
Yeah, agree. Get involved in the community, educate yourself, build for scale, and build for the long term.
All right, thanks a lot. Thanks, Cholo. Thanks, David, Faye, and Rohan. So, yeah, so that's where we have it. So I guess we'll be around here. So just do approach us. You know, like if you have any questions and just want to link up and all, we'll be around. All right.
Thank you once again to all our panelists. Thank you very much with the topic of NFTs and GameFi drive mass adoption of blockchain and crypto. Give us a few minutes as we clear out the stage and we move on to our next topic and our next speaker. So how's everybody? Oh, only 3 people responded. The others all not okay. Wow, no sound again. Hello. Hi. Okay, once again, my name is Sugan. Glad to see we have lots of you wonderful people joining us here on a weekday. Give yourself a big round of applause for all the effort you put in to come and join us here. Pure determination. Thank you very much. Okay, so the next one, the next topic would be stable coins, the bridge to digital value. So we'll invite our next speaker once we have cleared out this wonderful sofa, so give a space for our speaker to walk around a bit. Oh, I just realized I'm on the screen. I can see myself. Okay, so are you all ready for our next topic? Please applause when I call out the speaker, okay? We show them some support. All right, can you guys do that? Ah, wonderful. Okay, so our next topic will be stable coins, the bridge to digital value. Let's welcome James Toh, Business Development Director at Coinstore.
Hello, everybody. We have a short video, so must wait for the animation. A bit like Golden Village. Okay, afternoon everybody. I'm James from Coinstore, BD Director there. A month ago, I was actually invited, or rather I was made known that I have to come here and do a presentation. So I was thinking about what kind of presentation should I be giving, what kind of topic, because there's a lot of experts here, which I think they will cover a lot more topics that I can say. So, but however, on the 7th of May, the Luna saga actually come about and the prices came all the way down to 0. I guess a lot of people has been wondering what happened. And also, for your information, it's actually a stable coin. So how can a stable coin actually drop all the way down to 0? My friend was asking me. So I thought that it may be a good topic to cover to allow the audience here to know the basics of stable coin and the history and also the future. So I was wondering, I mean, when this actually came down to 0, I was thinking whether stablecoin has lost its trust and credibility. And I feel that, this one. Next, right? Yeah. So I was thinking about this. So I thought that we come up with this topic called stable coins, the bridge to digital value. Okay, when we actually explain about stablecoin, we have to answer this question. We have to go back firstly to the birth of cryptocurrency. Bitcoin was created like as a medium of exchange generally over more than a decade ago. But however, there's a big problem. It was plagued by actually high price volatility and lack of price stability. A lot of times, the prices of Bitcoin can be affected by global, political, and economic factors. So, for example, in 2017, in Japan and Korea, actually they wanted to ban crypto, and hence the price came down from 20,000 in 2017 to around 3,500 in 2018. So this kind of volatility will make it very difficult for actually businesses to conduct trading, or rather to exchange, to use Bitcoin as a mode of transfer or as a medium of exchange. So the world actually needs something that is more trustworthy, something that is more stable, with better predictability, and still process the benefit and efficiency of a cryptocurrency. So when I explained about stablecoin, I thought I might as well tell you the history of stablecoin. The first stablecoin is actually BitUSD, launched in 2014. However, after Big Phoenix launched its USDT in July 2014, easily USDT became the most popular one. Okay, this graph actually shows the adoption of stablecoin. More importantly, I want to highlight the global demand for stablecoin has surged tremendously. Sorry, has surged greatly. And between October 2020 to 2021, the growth is roughly 495%. Recently, in 2022 Q1, it touches 180 billion mark. Okay, so we call this phenomenon stablecoin invasion. At the moment now, there's more than 200 active stablecoins in circulation. This came as a surprise to me because we always thought that stablecoin is like USDT, USDC. Those are the more popular ones, but there are a lot many others out in the market. So, I mean, choose wisely. I'm going to cover a few points about users and benefits because there's a lot of times people thought that USDT is just a mode of sending, but it serves quite a lot of purpose. Of course, at the same time, this is the most basic one, which is to minimize volatility, because for Bitcoin, it can swing up to 10%, up and down 10% per day, which is actually very unacceptable for businesses. Secondly, quite obviously is also to earn interest lah. I'm sure many of you here may know that for stablecoin, you can actually stake in a centralized exchange or even in many DeFi platform that interest can be 5 to 20% sometimes. Of course, also for potential everyday's use of currency. Firstly, it can be used for facilitating of overseas transaction. I don't know whether you guys know or not, currently there's more and more people transact using the stablecoin, mainly for making of payments, to send for school fees, or maybe to send to our loved ones, or even to purchase items. Even like, for example, vices like gambling, people use stablecoin as well. So there's a lot of different purpose for stablecoin nowadays. So more and more, we have noticed that it becomes like day-to-day commerce. You can even use stablecoin. And one of the example is that you can also see that there's people start to use crypto cards in like for those Visa and Masters. The other one is to promote decentralized forex. Cryptocurrency is open, globally, and is digitally accessible over the internet for 24/7. You never see like people say that crypto will rest. There's no holiday. Even midnight, you want to send funds over. It's cheap, it's good, then it's fast as well. Okay, so that's why people adopt cryptocurrency as a form of forex. But to many of us here, you may be just thinking that I send funds to my friend, I lend money to my friend. It's simple as that. But actually, to many countries, especially for the third world countries, stablecoin, or rather cryptocurrency, is very important. I got a colleague that works in Nigeria. He told me that the businesses there can't survive if, let's say, without help from, like, let's say, sending of crypto or USDT or USDC. Reason being is because due to inefficiency, their bank transfer can take up to like 7-8 days, sometimes still never go through. And also at the same time, the cost can be as high as 10%. So if, let's say, you rely on such a network, banking network, to actually conduct business transaction, a lot of business may fail. So that's why it's huge in Africa. is also huge in South America. In Coinstore, we have like staff over 70 all around the world. So I'm quite lucky to be able to speak to them, to find out from them. We even have staff working from in JP Morgan in Argentina that switched from JP Morgan to Coinstore because he said everybody believes in cryptocurrency nowadays, yeah, due to the weakening of peso in Argentina. Just for information, 20 years ago, Argentina peso to US dollar is 1:1. Currently, it has depreciated by 100 times. 1:, I think, 0.01. So it's quite serious. Okay, the one more point is that it improves efficiency for P2P and recurring payment. I'm sure many of you here are self-employed, business owner, self-employed. So you guys will know that actually the admin kind of things when you do make salary payment is quite a headache because you have to go to banks, then the banks will have to process your payment, salary, and for those Singaporean, you will know that this is what the bank call standing orders. You have to do paperwork, costs as well, and things like that. Especially for those that actually you have a global business, you have staff all around the world, you have to make internet banking, overseas transfer. It's really a headache and it's quite costly as well. But however, with the help of blockchain, with this smart contract, you can actually do recurring transaction. Recurring transaction means that within your smart contract, you can set that every month on the first, money will be transferred over. This can be self-executed by the blockchain themselves, as in the smart contract, you can set it. And so this is very helpful for international firms to facilitate recurring salary payment and very hassle-free. So it works like a bank standing order, but it's just cheaper, faster, and they don't take any off. So basically, it's very predictable. And another strength for using stablecoin as salary payment, using blockchain and smart contract is that I'm sure some Singaporeans here, when you are a business owner, you want to dig out transaction like 6 to 10 years ago or 20 years ago, the bank will tell you that they are unable to provide you the information because they keep the record for only 5 years. After 5 years, they will keep in the very secured place whereby you want to apply for the statement. Either they reject you or they will tell you to wait for a long time. But as you know, for blockchain, everything is permanent. You can just check back the record easily. Nothing will be deleted. So this is another very good example or rather use case of stablecoin. Okay, I'll quickly cover a few types of category of stablecoin because there's actually more to just USDT and USDC. But of course, the most common one is this fiat peg stablecoin. It's actually 1:1 ratio backed by reserve currency. At the moment now, USDT and USDC, they currently form 2/3 of the total stablecoin market share. So that's why you see most centralized exchange are using this as a pairing because they are the most common ones. But of course, there are also other popular ones. I just give you some example like the PEG dollars and Gemini dollars. Both of them, they are regulated by New York State Department of Financial Services. So they are actually considered audited and should be quite safe. There's also, for those Singaporeans here, XSGD stablecoin, 1:1 backed by SGD. They are issued by XFER, which is also licensed by Singapore government, MAS. So these are examples of more common fiat collateralized stablecoin. The second category of stablecoin is commodity pegged stablecoin. Stablecoin have their value pegged to another value of commodities such as precious metal, gold and silver, oil, real estate. So these are all commodity pegged stablecoin. It's not as common, but it's also coming up. We see more and more in our business recently as well. Example is DGX. This ticker for token is pegged to gold. Another one is SRC, is actually backed by a portfolio of Swiss real estate. Okay, so these are actually different types of stablecoin. The third type is actually a crypto collateralized stablecoin. Usually we consider this as riskier because the underlying collaterals is actually crypto itself. Although the crypto itself can be like a very very strong crypto like Ethereum, but however, because of the volatility nature, we usually will require, or rather this kind of stablecoin will require more than 1:1. Example, just to protect from extreme price movement. A good example would be a DAI, the ETH-backed token. 100 worth of DAI will require underlying reserve of about 200 ETH lah. But it's very commonly used in the DeFi space for DAI. The last one, which is the topic of the town, which is this algorithmic stablecoin. Example of Luna is one such. The non-collateralized stablecoin, for this type of stablecoin, they do not have any collateral back to it. Then why do we call it stable? It's because they are tied to an algorithm, a mechanism that will automatically increase, will increase the supply of the coin if the demand of the coin increase. And if let's say, so that they reduce the price to a normal price and vice versa. So it works based on the factors of market demand and supply. Of course, just like cryptocurrency as a whole, NFT as a whole, or any new technology, there's always dApps, okay? So I'm going to share some of the major types of stablecoin. First of all will always be the counterparty risk. We all claim that stablecoin are pegged by commodities, by reserve. But however, one very important thing is I haven't found something that is actually fully audited so far, okay? And like for example, sorry, I just go back to that previous one. For example, Tether was fined 41 million because in 2016 to 2019, CFTC found that they do not have adequate reserve, so that's why they got fined. Even the trusted ones like USDC and Gemini, up to date, there's no record of a complete full audit but I still think that they are okay because I'll justify, I will share more in the points later. Another part is lower liquidity concerns. This is more relevant to commodity-pegged stablecoin because you know commodity are rare in nature. Example, gold. You can never have enough to satisfy the endless requirement as a reserve for the stablecoin market. So this is a risk itself. So if you are going for commodity-pegged stablecoin, then be careful about this. Another thing, of course, is the lack of awareness and that leads to a lower adoption rate. Currently, the total, the population globally that adopt crypto is still considered minority. A lot of people choose to sit on the fence. So even if let's say stablecoin or cryptocurrency has their advantage, it will take a lot of time for new generation or rather for the old generation to adopt it. This is always a big problem here from government because government is always will always be concerned due to AML reason. People are abusing the ease of a transfer and the checks and things like this. And also at the same time, there will be fear from the government that one day the fiat currency may lose control or rather lose its value or the use case. So if you find that the government are always trying to control this stable coin or rather cryptocurrency, so this is actually the main reason. So the impact on digital yuan is something I want to especially highlight. There are many countries, or rather even for Europe, they are coming out with digital currency, which I think one of the guest speakers will also be covering tomorrow. For China, they have banned cryptocurrency. One of the main stablecoin that Chinese love to use is USDT. This is their favorite. But however, in terms of clamping down on stablecoin due to the introduction of digital yuan, may result in panic selling of USDT. If let's say there's a market crash, worldwide crypto market may be affected as well. So, but however, in January this year, 2022, China launched their pilot project for digital yuan. It doesn't have much impact on Tether yet. So let's keep our fingers crossed. Okay, there's so many doubts of stablecoin, but is there any? Does it mean that stablecoin is losing its value, or rather the role or trust of the public? I don't have an answer for this. But however, I can only prove by showing some pointers to show that it's still widely adopted, and there may be just some case to that. Like for example, USDC is listed on Coinbase, and you know that Coinbase is actually listed in New York Stock Exchange. There will be very full and rather very careful auditing and due diligence done on this USDC. So this is one justification. Another thing is that we notice that there's more and more adoption of stablecoin by financial institutions and also banking companies around the world. Like even for the recent CoinDesk Consensus 2022, Fed Vice Chairman say that we should be saying yes to stablecoin. There's a strong people support, and also Circle, which is also a stablecoin issuer. They have added Signature Bank, which is a US bank, as a banking partner. So there's more cross collaboration between the authorities and also the stablecoins. Is actually giving us some kind of belief that stablecoin can move towards more mainstream in the future. Okay, so in my closing address, anyway, this is my LinkedIn QR code, just in case. For my closing address, I would like to say that there's a lot of advice given online, but always do your own research and also be prudent. Because certain things are very complicated, like for example, the Luna case, it will be quite difficult for lay people to understand. You may understand the concept, but it takes someone that knows coding to be able to see whether will this work or not. So basically, I urge everyone, if let's say you are not very sure, don't go for something that is very complicated and putting in all your funds. So nothing online is financial advice, please take note. And if you are asking me whether stablecoin will be safe, should I put in 50% of my savings inside? I will always recommend that if you don't know, then don't try to be clever. Just when you're not using the stablecoin, or rather not trading, just change back to fiat and then keep them. Money in the pocket, or rather money in the bank, is always safer than on the on somewhere else. Some people's wallet or some custody wallet. That's what I'm taught. Thank you so much for your time. Thank you. Yeah.
Thank you very much to our speaker, Mr. James To, with the topic stablecoins, the bridge to digital value. Okay, as we move on down to our next topic, is called Algo coins, a bridge over troubled waters. Let's welcome Michael Conn, Chairman, CEO, and Co-Chief Investment Officer at Zilliqa Capital. Let's welcome Mr. Michael Conn.
Thank you. Thank you, everybody. And thank you, James, for laying the table quite well with your presentation. I think James went into a lot of good detail on stablecoins all around. Firstly, 239 billion USD is a lot of money. And that's the current amount that is locked up from a total value locked perspective in DeFi globally, and that's up about 40,000% from the beginning of 2020. So clearly, in a zero interest world, folks are looking for interest somewhere and yield somewhere. And they've been going to stablecoins to try to achieve this. So, you know, it's not uncommon for someone when you're getting 0 to look at stablecoins where you could get 20% or 40% or more and say, you know, I want a seat at the table. So, you know, using these algo stablecoins specifically, that's where a lot of folks have really been gaining a lot of this value. You know, as opposed to Bitcoin or Ethereum where you're staking and you can make 1 to 3% or something in that range, you know, these algo coins like Iron Finance or Terra Luna UST or the more recent USDD, you get 20% or 40% or more. So, you know, the main background behind this, and James went in a little bit in detail on this, is that these are effectively folks taking long positions on those coins. A lot of them are quite complex, but the main point is you're taking a long position, you're expecting that the ecosystem around these coins will increase in value, and you're also expecting that the value inherent in that token will increase as more and more money comes in and as you're clipping coupons on your long positions. Now, that sounds very nice when it works, except in most cases it doesn't over the long term. So, you know, all currencies or coins are effectively a bridge from one place to another and are used to facilitate trade and investing, etc. And these coins and currencies generally are worthless unless you and I believe that there is value there. So, in general, the reality with algorithmic coins, whether they're in the traditional markets or not, is that they're bound to fail without continuous outside funding or significant collateralization or over-collateralization by real assets or a belief, whether corrected or not, that the coin or currency will never fail. And there's numerous real-world examples of this in both the digital asset world, but even in the traditional asset world. So if you look back into the 1970s at the Bretton Woods system, where pegged currencies around the world were pegged to the US dollar, and the US dollar was backed by gold. Effectively, it was the gold standard. When the gold standard collapsed and the US dollar was no longer supported by gold, Bretton Woods collapsed, and that led to significant repercussions in the 1970s. And again, this was a traditional fiat currency, and now the US dollar is deemed too big to fail, and so it's backed by the full faith and credit of the US government, but there isn't anything from a real asset perspective that's backing it. You can go into the 90s with George Soros when he broke the Bank of England. You know, Black Wednesday, as it was called, in September of 1992, when he broke the Bank of England and it broke its peg with the European exchange rate mechanism. And those repercussions are still being felt today, you know, with Brexit, etc. And, you know, even when we look at some of the other countries with major currencies around the world, like the Chinese yuan or other notable currencies that have held fixed pegs to the US dollar in the past, they've shifted to a managed float system where they are able more easily to avoid runs on their currency, like we saw in the currency crisis of 1998, where folks had to back their reserves and prevent a run. Now, when you translate from traditional assets into digital assets, this is where you see a lot of this today, and people like to highlight the fact that these losses originated in digital asset world, but clearly this has happened before outside of digital assets. But that said, you know, when you're looking at creating any algorithmic stablecoin, you're building a bridge, and almost like building a bridge between two islands that are effectively made out of quicksand. And you need both of those islands to balance each other out, which is nearly impossible unless you're continuously pouring concrete into the foundations of each of these through outside funding. And this also includes non-asset-backed fiat currencies as well. So that concrete can come from the faith and credit of a government, or it can come from continuous funding from entities like whether it was the Terra Guard or whether it's anybody else that tries to back currencies with something that has a real asset effect to it. So basically, if you were to look at pouring this concrete and you start to run out of that concrete like the Terra Guard did, you can have a collapse. So, you know, recent collapses such as Iron Finance, when the Titan governance token failed to hold up its part of the bargain and you lost about $2 billion worth of market cap in early 2021. Now you had folks like Mark Cuban that were touched by that. I mean, these are some of the smartest minds in the room that were touched. But unfortunately, people don't always learn from previous issues, especially in the algo world. Then more recently, and kind of the topic of many people, is Terra, Luna, UST. You had a coin with a $40 billion market cap that eroded within the course of 1 to 2 months and went down to nearly zero. And that's despite billions of dollars worth of Bitcoin being used to try to backfill that coin. So, the problem is that when good money stops chasing after bad, at some point these algo coins are bound to fail. And now some people may ask, is the 20% yield that the Terra team's talking about, or the 40% yield that USDD is putting out there, is this, and does it smell like a Ponzi? And maybe, if you look at it, maybe it kind of is. Because the definition of a Ponzi is an investment scheme where early investors are compensated or benefited from the capital that is invested from future investors. And as long as new money or outside money keeps coming in, the original investors benefit, the whole ecosystem grows, and everybody is fine. But when that new money, that new capital dries up, these coins magnificently collapse. Now, I'm not saying that any of the folks behind any of these algo coins purposefully and intentionally set out to do a rug pull or steal from the investors, but in the traditional financial world, anyone that publicly hyped up an investment and told their investors not to worry about it as it was falling down and did nothing about it after the fact, and as it continued to plummet in value, would certainly be investigated. So, we'll see what happens here with Terra, Luna, UST, but, it's an interesting precedent to see where this goes. Now, some people try to solve for this, and one of the companies that I really like a lot is called Maker, and DAI, as James touched on, but these are over-collateralized stablecoins. So for every one Maker, it's backed by sometimes 2 to 3 times of real assets or assets that have traditional value. And so that's one way to kind of bridge the volatility that you see in the digital asset space. Now, my hope in general is not for these algo coins to go away. I think innovation and new ideas should always be respected and encouraged, but my hope is rather for these things to be treated exactly as they are, which are risky assets rather than get-rich-quick schemes that end up hurting the retail investor more than anyone else and end up giving us, folks in builders and people trying to do real things in the crypto and digital asset world, we're the ones getting the black eye while the retail investor gets burned. So my hope is somehow trying to find a balance between this, but that's, that remains to be seen as we go forward. Thank you.
Thank you very much once again to our speaker, Mr. Michael Conn. Thank you so much with the topic, Algo Coins, a bridge over troubled waters. Okay, the next topic will be the real audience of play to earn games. Let's welcome our speaker, Coby Wilton, co-founder and CMO of Pegaxy. A round of applause, please.
Hey everyone, thank you so much for the intro. As you heard, my name is Coby. I am the co-founder here at Mirai Labs. We most commonly known for our project Pegaxy. So I know there's quite a few participants of our game here in the guild. And anyone that's reached out, I just want to say thank you. I really, really appreciate the support. So I guess a little bit of background. Oh. Appreciate it. I guess a little bit of background on us if you are not aware. Pegaxy, we launched around the time of when Axie was really getting a lot of attention. So it was in November 2021. So you could definitely say we were lucky enough to hit the market at the right time, for sure. And we came to market with a couple of interesting innovations, I would say. And our ecosystem really facilitated quite quick growth, but it was a little bit quicker than I guess we suspected at the time. So between then and now, we've had about $200 million through the platform on the secondary marketplace. And to put that into perspective, we have when we launched, we had a 2D auto racing horse arcade game. So the times were a little bit crazy at that point. So what I wanted to discuss today, initially, I do want to preface it a little bit, kind of like a who and why. So who this is going to be for, and I know there's a lot of people this won't apply to, but I do hope that the ones who it does apply to do listen up. So it's going to be the ones who are the VCs, also studios. I know there is actually quite a few studios here. They have reached out to me, so this will definitely apply to you. Angels, or really anyone looking from the outside in, wondering what's happening in the landscape inside, I guess, the play to earn or NFT gaming, as some people are referring to it now. So, and the reason that we want to do this is obviously knowing the current stage of the audience and where we are now is going to be exceptionally important for predicting what the future has to hold for us. Obviously, knowing the future is almost impossible, but it gives us a good chance, I guess you could say. So this is going to be essential, really, to the understanding of what I'm trying to say coming up. Now, what this is kind of like the life cycle of an industry, and this is going to be quite familiar to a lot of you if you have been in the space, probably say since 2016, 2017, during those ICO days. Now, there's 5 stages: the niche community, the word of mouth discoverers, the next best thing, the realization stage, and then we have maturity. A lot of this applies to crypto tokens in a general sense, very, very early on. There's probably some people that came through that. Most recently would be DeFi Summer, or just the DeFi space in general. This is going to be probably what most people relate to with this. And then now, obviously, we're talking about GameFi, play to earn, NFT gaming in the general sense. So a niche community. What is a niche community? The easiest example for that in NFTs would be something like CryptoKitties, if you guys are familiar. CryptoKitties was very, very early. It was actually during kind of the ICO days, and the community there was definitely passionate about pictures of cats. And they're not even that cute. They're kind of cute, but they're not that cute. And they were on-chain. So it was a very small community, say 1 to 10,000 people. They were like, I've got a cat, it's a picture, and it's on-chain. I think that's pretty awesome. And what they started to do was talk to their friends. Some people probably thought that they were insane or weird. But then some people obviously did love the idea. And that's what brings us to the word of mouth discoverers. So the word of mouth discoverers are basically people who heard it from other people, but also are the ones who like to talk. So let's say my friend introduced CryptoKitties to me, and I'm like, sweet as, I want to buy a cat. But I want to show that cat to someone. So of course, I heard of it through word of mouth. Then I go out there and I'm like, come look at my cat. It's really cool. And I'm going to go and show as many people as I can the cats. And that's what we call word of mouth discoveries. That's a very, very important phase within, I guess, the life cycle of an industry. That would go back to crypto tokens in the general sense. You had very early adopters, and then in the word of mouth discoverers, they're the ones who are really, really hyped about that there is tokens on chain and the ideals of cryptocurrency in general. And these guys, as I said, are generally the foundation, the early adopters that move into becoming the next best thing. The next best thing stage is probably the one that most of us are very, very familiar with. So this is more so like the, how would I say, like the hysteria stage. This is 2017 and kind of now in a nutshell. This is where people kind of throw away the general ideas, the concepts and reality, and just accept the fact that NFTs are going to overtake the world. You're going to need NFTs to eat. They're going to change people's lives. And same with cryptocurrency. They don't think logically, it's just the next best thing everybody needs to get in. So it's a bit of a hysteria stage, and I know that most of you guys have likely experienced something like that. But very quickly following that comes a realization stage, which you guys who went through DeFi Summer will absolutely know what this is. Realization stage is when you recognize that maybe those thoughts that you had when you first discovered the industry, maybe that picture of a cat isn't actually as cool as you thought because you can screenshot it. So that's a realization stage to where DeFi, you know, I thought DeFi was going to take over the world. It just makes sense if everyone chooses DeFi, we're sweet. But actually, it's taking a little while to get to that point, and unfortunately, the products are taking a while to build. So it's not as cool as I thought. And then finally, we enter maturity. Maturity is actually when the hype does stop. The innovations don't stop, and I guess the technology and the releases don't stop, and even the money. But the general hype, the amount of people talking about it, the news that does come out, that generally does stop or slow down. So hopefully that does make sense to you guys. Actually, before I go into that, so I just spoke about this recently in Croatia, and I want to get a show of hands. So in this general sense, we're talking about the NFT gaming industry and play to earn. So I want to see a show of hands. Who thinks that we're in the niche community stage right now? Wildly different to Europe. Literally the entire room in Europe put their hand up. I was like, what's going on? Okay, thank God. Who thinks we're in the word of mouth discoverers phase? So people are still talking about it. People are discovering it through word of mouth. Okay, decent amount of people. The next best thing stage, NFTs, play to earn gaming. It's going to take over the world. Who thinks we're in that stage? Okay, 50-50 between those two. Then finally, a realization stage. We're recognizing that play to earn maybe won't take over the world and take over all gaming. Okay, we do very nice. We have a couple. And then who thinks we're in maturity right now? Who thinks that we're done basically with all of the hype and we're on the end slope here? No one? Okay, beautiful. That's good. I'm glad. It's wildly different. I just wanted to run that experiment to see the difference between, I guess, Europe and Asia. But it seems you guys are a bit more clued in, I guess. So hopefully you do agree with me. I do want to note that obviously a lot of this is my opinion here. But the reality, this is where I think that we are right now, is basically what you guys said. A bit of a cross between the next best thing and the realization stage. Now, the next best thing is, of course, because we have games like Steppen coming out. It's been spoken about a lot recently during this conference. And it's bringing in new people into the industry, still some new money, which is amazing. But a realization stage is absolutely apparent because there was 2 million people playing Axie Infinity maybe 12 months ago. And they're recognizing there is a bit of a trend happening here in all of the games. They seem to do something very familiar every time a token is released, every time it peaks and it comes down again. But it's very, very important that when we look at this, the reality, we need to look at who are the people playing right now. Who is the real audience? So when we go back and look at those stages here, there's 5 stages. Generally what we're going to notice is that the first 4 stages are actually the same people. The early adopters, the guys who got in, let's say, 2017 or something like that, those guys are probably still going to be in around this point because they've made life-changing money. It's kind of hard to leave something that's probably changed your life. And I know a lot of people here are from the Philippines and they've likely experienced that as well. So they're still going to stick around. But those first 4 stages are also the guys that experience the rug pulls, experience the bullshit that happens in crypto, unfortunately. The ups and the downs, the absolute madness that we do experience. And what's interesting to note is that when we look at this stage, the maturity stage, these first 4 stages don't just apply to GameFi, as I mentioned, it applies to DeFi as well. But when we head towards maturity, for some reason, the crypto industry does get scared. And I think it's because likely the DeFi, what I would call DeFi summer, most people call it that, did scare them because the audience is generally only crypto native people. So they're in general fear of maturity. What I call that is Web3 brain. Now, Web3 brain is when, and we're all guilty of it, it's when we get to a point where we kind of throw away the fundamentals of business because we think that it doesn't apply to us in Web3. Web 2 doesn't exist anymore. We're sticking to our ideals and the fundamentals just simply don't apply. But unfortunately, that's not reality. And when we're looking at the GameFi or the play-to-earn sector, what we'll realize is that most Web3 studios are actually Web3 native. Most studios, I should say, are Web3 native. And that's the same for us. We were in Web3 before we did come into to build a studio. It just came out of basic interest. However, what that does bring along is a lot of bad habits. And those bad habits include thinking that launching a token, you launch an NFT, you get some influencers, you get some KOLs, you get a massive amount of hype, and you're done. I know that you guys have seen a lot of projects do that. And they think that they've hit the jackpot, basically, once they're at the top. But let's imagine this. You peak in your alpha. Now what? Now what? What are you going to do? Everybody's seen your product. It's 2% done, and they think that is your end product. Now what? You're in a bit of an odd position. And it's important for you guys to note that Web3 isn't a charity. So if you do launch, if you get all of this hype, if you launch these tokens, if you launch this NFT, and you go to the effing moon, it's probably not going to be a good thing. And without a product, not even Web3 hype is going to save you. It's not going to really do anything for you. It's going to get you a lot of attention, but again, they're not going to stick around. Easiest way to put this is, hopefully you guys can see it. I know this does get in the way. But basically, you wouldn't IPO in the traditional space. It would be considered literal madness for you to IPO at a $500 million valuation without a product. But in crypto, probably 3 happened this week. Like, it's not normal. And that just validifies the fact that a lot of us are stuck with these Web3 brains. And it's important for us to recognize that fundamentals of business still apply in this space. Now, when we're talking about DeFi and then we're talking about play to earn, it's important to recognize down the bottom here, you may not be able to see it, so I'll read it out. We are not DeFi, and maturity within this crypto sector for the gaming space does not mean total saturation of our industry. Of course, with DeFi, once you've reached everyone in the crypto space, it kind of doesn't apply anymore. However, with gaming, they're 2 separate industries. Maturity is actually the beginning of a new cycle. It's something that should be embraced here. And the audience within maturity is the real audience. Like I mentioned to you guys earlier, the people who are in Web3 playing now, these games, are really just kind of here for money. Like I said at the start, we had a 2D auto horse racing arcade game with $200 million through it. Is that normal? That's not normal. That's insane. So it should say something here. Real studios in maturity are the ones that are going to thrive. Why? Because they're the guys that have strategies for user acquisition. These are the guys that understand the fundamentals of business. You need profitability. You don't need hype. You're not going to launch to the moon and make some money off your tokens or something like that. That's just not normal. And we need to make sure, if you're looking from the outside in, if you're looking to invest in a studio or something like that, you need to make sure that the studios that you guys are looking at understand this, because the audience right now is simply not their audience. And down the bottom here, this is very, very important. Once a mature industry does come into play, which I personally think we're probably 12 months away, the studios that you're looking at, or the games in general, they're either going to need to adapt or die. Or they're going to adapt or they're going to die if they launched in the current situation that you're seeing right now. Adapting means, of course, pivoting towards where they're able to go out there and build a solid game that is able to acquire users through strategies which are generally seen in the Web 2 space or in the traditional space. And if they still honestly believe that they are going to launch, gain a massive amount of hype, launch NFTs, launch tokens, all of this stuff, and they're going to survive in 6 months' time, unfortunately, that's just not going to be a reality, and they will die. The fundamentals always, always, always apply. Now, I want to show a couple examples of Web3 brain for you guys, and how it's so prevalent in the GameFi space. So I'm even going to call myself out here. Our company, we've experienced it, all right? So it's all here. You guys are going to see, in the top left, we've got Rev Racing. So Rev Racing is by Animoca. Animoca is a billion-dollar valued company. They had the exact same experience. It goes up with hype. It goes down after people are no longer interested. These guys had an actual game. People were playing these games here, and you can see they had 2 more peaks after it. They released other games. They released something related to Rev Token, and then finally another one, which was Rev Racing. But of course, as you can see, these movements are simply based on hype. not the performance of the game. Pegaxy in the top right. I told you guys, we had a 2D horse racing game. How can we have such crazy movements with something like this? Launching at such a low price and we moving up to $1. It's simply not warranted. The bottom left, Axie Infinity. You guys, everyone knows the story of Axie. I don't need to go into it. But they experienced the same thing. But the one that does validify it most is Illuvium here. How can it have the same chart and it doesn't even have a game? It doesn't make sense. How can they have the same chart with all of these other released games, but they don't even have a game? People just don't give a shit about the game right now. It's very important for you guys to understand that. So, who is the real audience? They're the ones that are coming in maturity. So I want you guys to be, I guess, excited for what's to come once our audience does mature. And in short, I want to summarize it for you guys. This is probably going to be the one, if you did want to take a picture, that you take a picture of. I'll get out of your way. Easiest way to put it is that if a studio does want instant early hype, if you see them going out to only influencers, Coles, talking about massive releases, all of this hype early on and they don't have a product, red flag, red flag. You want to be nervous. I would be asking them what their strategy is in 12 months' time of acquiring users. The current token movements do not dictate future success. I think that's pretty obvious. You guys can't tell me right now that Illuvium failed when they haven't even released a game. You can't make the argument. It's the same as STEPN. They all make this movement. Unfortunately, it's just not the right audience right now. Business fundamentals apply to all studios. Web 2 or Web 3. No matter what, a Web 3 studio needs profitability. If they don't have profitability, they're not going to be here in the long term. Their runway doesn't matter. They're going to eat into it and they're going to die. Web 2 fundamentals always apply. The current users are not the real audience. Again, like I told you guys, when this push comes to shove, they're going to be going to the market. They're going to be discovering the real audience that does want to interact with these games. Right now, they are surviving off pure hype and speculation and, of course, organic growth, which is not sustainable in any company, in any industry, in any business. And in 24 months, guys, the real studios will still be around. The rest are going to be relics. The ones that can adapt and bring on and onboard users without hype are going to be the ones that do well, that are going to survive. And for you guys looking to invest, looking to dive in, or even do it yourself, make sure that you look at these points and you ask the companies that you're looking to invest in that they understand this. Because if they don't, unfortunately, I guess it's my opinion here, but I think they'll be dead in 24 months. I just want to say thank you to you guys for listening. I do appreciate it. And if you have any questions, feel free to reach out or come and see me here. Thank you, guys.
Thank you once again to our speaker, Cory Wilton. Thank you very much with the topic, the real audience of play to earn games. Thank you very much. A big round of applause once again, everyone, to Cory Wilton. Okay, our next topic would be growing cryptocurrency in the region. I'd like to welcome our speaker, Mr. Lee Ren Zeng, regional consultant at xt.com. A round of applause, please. Thank you.
Hello. Hello, good afternoon, everyone. Excuse me. Hello, good afternoon, everyone. Okay, so I'm going to talk about the growing cryptocurrency in the region. And for the region, I'm talking about Southeast Asia. Or to some of you, you might know it as ASEAN. There are about 10 countries here. And you're sitting in one now, which is Singapore. Okay, so some of the characteristics of Southeast Asia, I'm sure some of you knows about it, but for those who have been here for the first time, let me just say a bit about the characteristics which are favorable for cryptocurrency. First of all, most of the country here have a large and relatively young population. Relatively young is like less than 30 years old. Okay, and large, I'm referring to something like 50 million or more. So a lot of countries here are like that. then there's definitely a medium to high economic growth in a lot of these countries here. So wealth is building up quickly in this region, and there are definitely more people who are able to purchase cryptocurrency or involved in some kind of cryptocurrency activity. And a lot of these countries here are going through economic transition. So 30 years ago, a lot of these places are largely agricultural with some small number of manufacturing, but today a lot of them are going to manufacturing and services. So a lot of these young people that we are talking about here, they are going to be not working in the fields anymore, but they are working in some kind of manufacturing or some kind of services, which includes IT services. So there will be a lot of people who have that kind of knowledge. And that also creates a talent pool, because some countries, as you all might know, are already outsourcing hub for like IT services or game creation. So there are a lot of people here who knows how to program. There are a lot of people here who knows the ins and outs of cryptocurrency, like how to market them, the financials of it. And of course, some of the cities here are also financial centers, like Singapore here is one of them, whereby people come here to get funding, they come here to get financial services, they come here to find VCs. And there are also foreigner enclaves in some of the places, especially Bali and Phuket, whereby you have all these Westerners staying in these countries. These people are probably trading some kind of cryptocurrencies in the day, trading in the night and then surfing in the day. Yeah, and of course, all these people bring a lot of cryptocurrency information to the locals there and created some kind of hub in these places as well. Then for this area, one of the favorable factors is also the large migratory workforce. It could be people going from rural areas to cities or going all over the world to work. So they'll be sending money home, and and some of it is cryptocurrency. And lastly, I want to touch on this very important factor in this region, which is the prevalence of smartphone and internet access. So if you are looking at 20 years ago, there's not a lot of people who are well connected, but today, even if you go to some of the most rural villages, you find that you have companies, you have like shops selling a lot of Samsung mobile phone, Apple mobile phone, Huawei, whatever. A lot of the people today are already having access to smartphones. Hence, they have a lot of access to cryptocurrency opportunities as well. Of course, there's also a lot of challenges in this region. For example, this place is very diverse in terms of ethnic, language, politics, whatever. So for a lot of businesses coming here, they will find it a very difficult position to do business because it's just so diverse. Yes, the population is large, but within population, there are population of people that lives totally differently, and they don't subscribe to the same kind of thinking. Then there are also variable regulations from places to places, even within countries sometimes. And of course, much of Southeast Asia is an entrenched cash-based economy. Even for a very advanced financial center like Singapore, you try walking out without cash, and you find that a lot of things you just can't buy properly. Not to mention some of the other countries around the region whereby almost everything is running on cash and internet banking is hardly available. Yeah, then also there's also a problem of the investment mindset. One thing that you'll notice here is that a lot of people have very short investment mindset. Everybody wants quick money, quick cash. And of course, a lot of the places here are not viewed as a place of tech innovation or advanced tech center. So that kind of deters some countries from coming over here to set up some kind of development base. Yeah, because if you just go to Google and you try searching Southeast Asia, you'll probably get pictures like the backdrop here, whereby you see holiday destinations and you don't see a lot of very high-tech stuff. So, well, when we talk about growing cryptocurrency in the region, right? Personally, I mean, you might have a different view, but I think that to get millions of people onto cryptocurrency in this region, the four main areas would be cryptocurrency as a form of investment, cryptocurrency as a form of remittance or payment, using NFTs, as well as cryptocurrency in terms of entertainment. Okay, so let's look at investment. So investment is very interesting for cryptocurrency in the region because naturally everybody here as well as everybody in the world loves money. So this investment of cryptocurrency is applicable across all social classes. Yeah, and cryptocurrency trading is actually quite accessible to most people. Okay, so there are a lot of people in this region, and I'm sure around the world as well, whereby you probably don't have a stock trading account. You can't buy your company shares, you can't buy Apple shares easily. However, there are a lot of exchanges whereby you can buy cryptocurrency pretty easily. And you got a huge access of, you have access to hundreds of different kind of cryptocurrency, from Bitcoin to the shitcoin. So there's a lot of easy access to a lot of people for cryptocurrency in this region, which makes people that doesn't have ability to buy stocks, they can buy cryptocurrency. And when I look at the way that people trade cryptocurrency or invest in cryptocurrency in this region, I tend to classify them into two different categories. First of all, is the wealthier people. People who already have some money or pretty wealthy in nature. So they would like to invest in cryptocurrency, like how they would like invest in equities or other financial products which they have done in the past. And they will use it as a form of wealth management. So let me just state an example. So I've been in Myanmar for many years, and when I was there, right, most of the people who are wealthy, they only talk about investments in terms of three items: buy land, buy gold, or buy USD. However, in the past 2 years, right, I have friends who come and ask me where to buy Bitcoin. Yeah, how to buy Bitcoin. Yeah, so they are already starting to look at Bitcoin, especially Bitcoin, as a form of wealth preservation, because people probably see themselves, they probably see that Bitcoin is an alternative to gold, is an alternative to holding USD, whereby they can store a lot of value in there and nobody can take it away from you. Then, of course, there's this very large group of less wealthy people who are not earning a lot of money in this region. They could simply be the sons and daughters of some farming community, people coming from villages to go to the big cities and work. And these are the people who are very interesting in their investment, because they will most likely be investing in some form of meme coin or some form of shit coin, some form of new projects. And they will probably be doing a lot of margin trade. So I have a lot of examples of what I experienced from this group of people. So let me just say a few. Yeah, so my first trip overseas ever since COVID happened was to Bali. And when we were in Bali, we were taking a taxi, and I was talking to some of my colleagues about cryptocurrency trading. So the taxi driver overheard us and just turned over to me. Bro, I also buy Shiba Inu, Dogecoin, and Matic. Yeah, for a taxi driver to know some of this, it's pretty impressive, especially for Matic. If they buy Shitcoin, it's fine, because a lot of people buy Shitcoin. But for them to know Matic, I don't know where he got it from, but that's pretty interesting. Then, as for margin trading, when I was in Vietnam, I met one guy whose salary cannot be more than $1,000 a month, but he can leverage trade, margin trade, to the point that he has a position which he shows me on his mobile phone, 107 Bitcoin. 107 Bitcoin is about 4 million when the time I saw it. So somebody with less than $1,000 a month, you pay for your bills, you pay for your food, probably have $300 left every month in your pocket, and you have a position of 107 Bitcoin. That's crazy, man. Yeah, I don't know how many 100x leverage he did and how many times he take profit from his position to end up in that kind of position. So a lot of people in this region are very interested in all these get rich quick opportunities. So investments in cryptocurrency, right, is going to bring in millions and millions of people in this region to trade cryptocurrency. Hey, the next one that I think is remittance, or payment as a form of a service, such that you will get the next millions of people in Southeast Asia to use cryptocurrency. Okay, for most people who live here, you might know that there's a lot of people in this region that work as some kind of migratory worker. You are working in some other countries, especially from the not so wealthy countries to the wealthier countries. So these people tend to need remittance. And even in the countries themselves, especially the larger ones, you have a lot of local people, local communities, small businesses who do not have a lot of access to traditional banking or internet banking facility. Typically, all these groups of people, I mean, sometimes even myself, I use some of these services. We rely on some of these trusted people or some kind of like a money transfer agent to transfer our money. So in a lot of cases, you can be going to a roadside shop whereby the place probably don't have a good electric power supply. But if you need to send a payment to somebody to buy something, you can just go to a certain shop whereby they hang a logo somewhere. You just go to them, pass them like a few $100 in your local currency and ask them send to that guy. They'll make a phone call and somebody else somewhere will get money. So that's some kind of pretty interesting service that is prevalent in this region. And how it survives is because there is like a lot of these people doesn't have a lot of facilities to do banking. Like you don't get ATM in the middle of everywhere. So they'll use all these kind of services. And personally, I think that cryptocurrency is a very interesting alternative because there are people who start to use cryptocurrency as a form of remittance. They send money from their work to home using cryptocurrency, especially in some form of stablecoin. And as long as cryptocurrency transaction costs remain cheap, they're cheap for low value transactions. A lot of these people are going to continue to use this, and more people are going to use this form of service, using it like a form of internet banking between businesses or between families, or as a form of or as a form of money transfer services in some other ways. Okay. The next one I'm going to talk about that I think is going to bring in like the next few million people onto cryptocurrency into this region is the NFT, non-fungible token. Okay, so for Southeast Asia, right, we have a history of all kinds of creative activities in many of the local culture. So a lot of these things are actually very good for creating some form of NFT out of it, if you can manage to digitalize it. And so, of course, there are traditional NFTs, like you have like digital artwork, you have photos, music, and games. These are the things that are quite easy to do, to make into a form of NFT. However, if you have been reading the news and you've been following cryptocurrency, you might find that in this area, there are also very interesting kind of NFT which are not traditional. For example, using religious item and even humor. So let me just, if you look at the photos up there, right, if you can see the like a Thai monk photo. So those are actually amulets. So in Thailand, right, somebody actually found that you can bring an NFT to the monk, get some blessing, and since the NFT is one of its kind, the blessing will go with this NFT, and so you can sell this NFT for money, and there are people who are willing to buy it, which is a pretty interesting idea that probably not many people have thought about it to use some form of a religious item as a form of NFT. And of course, if you look at the other photo below, which has a lot of faces, there's somebody in Indonesia actually took photos of himself over a period of 3 years and sell his photos on the NFT. And I don't see why somebody want to buy his photos, but I personally think that people are willing to buy that because it's humorous, it's just funny. And if you can actually digitalize humor, that's a very creative idea from anybody. Yeah, so I feel that NFT itself could be a driver for cryptocurrency adoption in this region. People will be creating NFT, and with the growing NFT DeFi in marketplace, with the growing NFT staking, people who are accessing NFT will one day be accessing cryptocurrency as well in the form of payment or because they're going to use the NFT DeFi. Okay. And the last one I would like to talk about is entertainment. So one of the things that we tend to see across the region is that there are actually a lot of people, young people, especially young men, who are using mobile game as their main source of entertainment. So if you are like walking down the streets of a lot of country, you'll see that a lot of young men who are like waiting for their work to start, or after work, or having lunch or something, all of them will take out their smartphone and start to play game. So this is a very common thing here. And hence, I feel that with the development of a lot of GameFi in cryptocurrency, a lot of these people are eventually going to be playing some form of cryptocurrency-related game. And by playing all these games, especially the play-to-earn games, they will be collecting cryptocurrency of some form. I don't know what form, but there will be some. They will be collecting some form of cryptocurrency or some form of NFT in their games. Hence, this will be driving millions of people into the cryptocurrency space as well. And if you look at countries like Vietnam, right, there are actually a lot of GameFi development there. And this kind of development would naturally flow into other countries around the region, and then more and more people will be able to access all these games and eventually come onto cryptocurrency. Yeah. So, well, other than this four, I do notice that there are also other ways that cryptocurrency in this region are being adopted. For example, there are some places whereby people are mining for Bitcoin and Ethereum because the energy is cheap. And then there are also companies who are tokenizing their company equities into some kind of crypto tokens and trying to sell them as shares. But however, I still think that these are the four main reasons that are going to drive the next few million people into cryptocurrency, because that naturally mining, right, is not accessible to a lot of people. And for tokenizing, right, if other people are not trading cryptocurrency in the first place, nobody will tokenize cryptocurrency in the future. Yeah, and I'm sure that eventually there'll be a lot of other activities that will probably get millions of people in this region to go into cryptocurrency as well. Just that for this moment, I see four. Okay, so just a little bit of advice for some of the people who are looking into doing business in Southeast Asia, especially doing a cryptocurrency business. So there's no one-size-fits-all solution. Every country is different. Yeah, please don't expect that what works for one country to work for another country. Everybody is different, and sometimes even within country, your solution that works in one city doesn't work for another city. It's just very diverse. Okay, and you naturally need to work with a lot of local people because you don't know the place, you don't know the culture, you don't know a lot of things, the underlying of it. You need a lot of people who are there, living there, working there, know the place well, to tell you what is it. And yeah, and it doesn't mean that your superior knowledge in another country is going to work for them because people work differently. Yeah. Okay, and rejecting basic regulations can be quite disastrous. I know that a lot of people treat Southeast Asia like some kind of backwater, some kind of very poor countries where people are willing to do anything for money, including violating regulations. But come on, most of the countries here are not that poor after all. So a lot of the basic regulations do get enforced by the government. So if you don't want to get your business wrecked by some authorities, please follow the basic regulations and work on it instead of work around it. Yeah, then, okay, business involves human relationship here, especially here, so don't expect your business to be pure cash transaction or what. Sometimes it involves a lot of eating and drinking, involves a lot of knowing the people. Yeah, so if you want to get your token reaching out to millions of people, try to reach out to the first few people and understand them first. And lastly, change is the only constant in the world, especially in this region. So be ready to embrace change and not try to be stoic about it and reject all the changes, because change is not going to go away. It's just going to keep changing and changing. Yep. And of course, that's the end of my presentation. I hope everybody has a good afternoon. If you have any questions, I'll be down there and we can have a good chat later. Thank you.
Okay, since we have 5 minutes more, we can take one question. Anyone would like to ask a question to Mr. Lee? Any question? Are you raising your hand up or is you just stretching? Any question? Oh, you have a question. Okay, wait. Here you go.
What percentage of, what countries in Asia do you think they're, like apart from Philippines, for example, they're very into NFT games? That's probably what allowed for like a huge distribution. But what other countries do you think they're very high on as far as NFT collector, or they have some sort of NFT interest in Asia specifically?
Sorry, I don't get your question. Can you repeat it again?
So as far as when NFTs are concerned, what countries in Asia do you think are more interested in NFTs versus other ones? Maybe like top 3.
Okay, I think for NFT, right, there are a lot of different types of NFT. There are a lot of different types of NFT, and I can think about a few right now. So, if let's say we are looking at NFT for games, right? Personally, I will be more looking at Vietnam and Thailand, because these are the places whereby when you are just there, you can see the number of GameFi being developed over there, and a lot of this GameFi is going to involve some form of NFT. So in terms of NFT in gaming, right, I will see that mostly it's going to come from the Vietnam and Thailand, that area, and probably even their neighboring countries, which I'm not very familiar because I've not seen it, so I can't tell exactly how is it like. But if you're looking at other forms of NFT, like NFT music or NFT artwork, right, personally I think that there's a huge potential in Indonesia. Because Indonesia itself, right, is a huge population, and there are actually a lot of creative activities going on in arts, in photography, music. Eventually, I think some of these people are going to tokenize a lot of these products and try to bring them to market. And we can already see some kind of growth in this NFT industry in Bali especially, because there are a lot of these creative people, creative activity artists who are looking for a way to sell their skills, and they are going towards NFT. Yeah. So yeah, it depends on the NFT that you're looking at.
Perfect.
Yeah,
and also, quick follow-up. Just personal opinion, what percentage of the NFT enthusiasts in Asia you think they're collectors versus traders?
Well, I think looking at the nature of most people in Southeast Asia, right, I would say that 80 to 90% of NFT collectors would eventually be some form of speculators. Yeah, and the real collectors are probably like 10%. Yeah, but these are just rough numbers that are just off my mind like that. And I look at it from a very much trading perspective, because most of the people who are getting into cryptocurrency are looking at the opportunity to have capital appreciation. And I believe that this is going to apply to NFT as well, because if the music or if the artwork is not going to make you money, if the game by playing is not going to generate more Ethereum for you or something like that, then why do I want to spend my time on it? I might as well spend my time and money on something that's going to generate some economic benefit. So I would say that it's more like 80, 90% will be more speculative and looking at economic benefits.
Thank you.
Thank you.
All right, thank you for all the questions. Thank you. Thank you, Mr. Lee. Thank you very much. There you have it. That was the topic of growing cryptocurrencies in the region. As we move on down to our next topic, which is what is the key for NFT brands to make 1 million plus in a day? So let's welcome our speaker, Mr. Arvind Kamse, NFT marketing expert on stage.
I think I have the... Oh, okay, you have a big one. This is working, right? Yeah, okay, perfect. BlockChain Fest fam. Okay, great to be here with you guys. I don't know if any one of you guys were at the other one in Cyprus as well. Maybe met some of you guys over there as well. I know some of you were. It's great to be here with you. It's also a very interesting time for the NFT folks. First of all, before I tell you about NFTs and how you can market them, by show of hands, who here has his own NFT collection? Okay, we've got some people here. And who is the NFT trader here in this room? Just show of hands. All right, great. So obviously, right now is a very interesting time for NFTs, right? So some of the speakers previously mentioned it as well. It's the bear market, right? So you see the CEO of Binance was delivering pizza the other day, and that's where we're heading, right? Obviously, I'm making a joke about that, but the people who are not wanting to look at their crypto wallets, that's a majority of people right now, okay? And then when it comes to NFTs, a lot of people obviously holding on to launching their NFTs, or if it means, they've already launched it, they kind of just is slowing down their processes. Their operations is a little bit different than what it used to be. In fact, I remember back in last year, November, December last year, I think we had a lot of projects that were selling out without having a lot of utilities, a lot of substance in their projects. And so I remember one of the projects we sold out in 7 minutes. We literally had
in the roadmap, we've written this phase 1 is going to be something to do with metaverse, phase 2 something to do with tokens, and phase 3 is going to be something to do with DAO, right? And we sold that in 7 minutes, and we made about $500,000. And this community still stays. It's not a rug pull or anything, but I just want to let you know that things have changed significantly. So back in November 2021, when things were just very happy, the sentiment of the market were very excited, very hypey, as some of the speakers in the past previously mentioned it, we're not in that stage anymore. So it's not about hype, so you actually have to have real utility, real substance in your project. Now, just so you guys know, I consulted 400 plus NFT projects. Several of them sold out in the top 40 on the OpenSea. One of them hit #1 trending on OpenSea. One of them hit #1 trending on IC.tools, and a bunch of them are top 40 on OpenSea. I also trade and collect NFTs myself, a lot of them. We don't know how many of them I'm going to sell right now because of obviously the sentiment of the market, but I'm definitely going to hold on to a lot of the blue chip collections that I have. And then as far as the marketing side of things, I've also been doing marketing for about 10 years. And so I've previously been working with public companies with their investor relationship marketing. And so anything to do with finding short-term investors, long-term investors, I've done it with public companies. And now, one of the speakers mentioned this. We're going to actually see a lot of businesses, so real businesses like these public companies, they're going to come in. I believe it was mentioned in the next 12 months. I already see that happening right now. Okay, and so there's going to be a huge change in the market in that sense. Now, when it comes to having your own collection and you wanting to selling out, there are obviously things that are happening right now. So we've got the influencer marketing side of things. We have 500 new projects coming out every day in this market, and so we don't have enough influencers for all these projects out there. And also, if you think about it, if you have, let's say if I'm an influencer and I'm talking about 10 projects this month, at some point you as an audience going to be like, okay, which one should I buy? Right? So at some point, it's going to be that time where the influencer cannot just talk about all the projects. So we already hit that point, right? And so influencers realizing they can't talk about every single project out there because, first of all, they're not sure if it's going to do well or not, but it's also like there's so many projects out there, right? So influencer marketing has taken a turn. And then also, you don't know how to quantify how much to pay them, right? So one of them, like they say, they come and say for one post, they're going to charge you $100K, and another one's going to say maybe a few $100s, right? So that's very different. There's a variety of it. Getting hold of them is actually very difficult. It's a part-time job to get hold of influencers right now. It takes maybe you to actually DM them on many platforms, email them, so on and so forth. And then whenever you do something with the influencer, the results is just hit or miss, right? So we had literally someone in my Discord, he paid an influencer $100,000, and the result that he got was 3 Discord members. From $100,000 investing. Okay, so the results were very hit and miss, right? There are amazing influencers out there too. I have really good friends of mine that are influencers in this market, but that's what the sentiment of the market is right now. And then also, of course, we have the impersonators too. Like there's literally someone I was about to pay, and I found out he's an impersonator of an influencer. He's still messaging me to this date, saying if I want to do some work with him. So that's also an issue, and people getting scammed and so on and so forth. And then as far as paid advertising, so the platforms that we used for paid advertising in the NFT, initially we used Instagram because it was working really well. So Facebook at some point opened up targeting and also NFT ads. And this was back in November last year after their introduction to Metaverse, or introduction to Meta rather. But then shortly after, they realized that's not going to work out. They removed their targeting, so the pricing for Instagram ads went up. So what we're doing right now, I'll tell you a little bit more about that too, but mostly focusing on platforms like Twitter, where a lot of NFT folks are already in it, that has a higher population. And so if you've tried Twitter ads on your own, you probably have noticed that your ads get halted. You need to have a certificate to be able to run ads. And also it's different for different countries, meaning like you need different certificates for different countries. And then we talked about Instagram. Of course, it's a bear market, so you're probably wondering, okay, is your pricing too much, right? And maybe people right now, they want to hold on to their money. Maybe cash is king, right? Who here thinks cash is king right now? All right, so you see, like, yeah, so people have that mindset, right? And I'm not saying it's a good or bad mindset, it's just that's something that's happening in the market right now. We talked about that. And then also, as it was mentioned previously, we had, back in last year, we had a lot of projects came out. There were a lot of them that didn't really deliver on their promises, so we have so many people that are jaded right now, right? So the sentiment of the market is also the savvy folks in the NFT. They've been at least rug pulled once or twice, right? And so they're very skeptic. Right? And then we have the newbies that are coming in. They don't know anything about NFTs yet, so they're a different type of profile. We talk about that in a second as well. And then also right now we're seeing some projects that they do all the right things and they still don't sell out, which is really odd, right? And it's just a phase right now. And then as far as utility, you see, so P2E, it was already discussed, DAO, tokens, these are some of the things that people think they can just throw these words out people, and people think they have great utilities, right? And that time has passed as well. Now, the promise of this talk, by the end of this, I want to show you how you can actually eliminate some of these problems that are in the market in this time, like right now in the bear market, and be able to actually sell out a collection. So first of all, I see sometimes people come to me and they say they have a 10,000 collection, but they don't have a budget for it. Now, I want to tell you why this is a problem. So one of the biggest problems we have in the NFT marketing and people thinking it's a scam is because people try to launch a project, but then they can't really deliver it because they don't have the resources, not because they don't want to. Majority of people who actually scam and rug pull, they're actually doing it because lack of resources. And so if you have it in mind that you want to do a collection and you want to sell it out, obviously seek for investors. There are plenty of investors out there. They want to get into the Web3, and they just don't know who to invest, right? So that's an opportunity for you. And then the other thing is, so it was also talked about previously, but some people coming into the Web3 and they do Web2 marketing. Right, so Web2 marketing, example of that, if you go into, let's say, Adidas store and you want to buy a t-shirt, the process looks like something like this. So you walk into the store and you look at it, you look at the item that you're about to buy, you may or may not buy it, right? And you may come back to it 6 months later, you still may or may not buy it. That's not the case with Web3 marketing. You can't leave it for 6 months. It has to happen in a very short amount of time. So if people bought it within 24 hours, within maybe even a week or so, they bought it. If they didn't, taken out of the market, done. Right? So this is a very important thing to understand, because as long as you can be relevant in the Web3, you're going to have a lot of people wanting to buy things from you in the Web3 as well. Now, also then, doing some people coming into this market thinking, well, they're just going to do something really cool, something hypey. They have really cool collaborations with this organization, with this influencer, and that's going to take care of everything for them. And a lot of time, I've seen those projects fail. In fact, I went through about 1,000 DMs over the past 2 months from just my Twitter alone. And I asked people, I said, how did your collection go? How is it going, right? And a lot of projects, they already wiped out. Right, so now that's a good thing in a way, because when in the past, everyone was just coming in because it was shiny, hypey, and they wanted to just do some cash grab. Right now, we're going to have innovations. We're going to have great things coming out. We're going to have amazing utilities, and people actually delivering on things, and even going above and beyond to make the community happy, make the community excited about things that are happening right now. Now, at this point, you may be thinking, okay, I want to go to the moon, right? But there are problems, right? So there's security issues, for example. One of the projects recently, I mean, there are a lot of projects, but one of the recently projects that I worked with, they lost 600K within few hours of their mint day. The only reason that happened was because they didn't have a multi-sig wallet, right? So things like this, obviously, pay attention to when you're launching a collection, because it's not only that you lost money, 600K is not, I mean, it's not too little, right? But also, once that happens, and I've seen this with many projects, people don't trust to come back and buy from you. They're done. Like that project, they're never gonna invest in because they're like, okay, how am I gonna make sure? You can do audits one after another and they're still gonna be like, well, I don't know. They may just lose money again. And if they lose money, obviously they're not gonna deliver on their promises. Obviously it's gonna be either a rug pull or they're just gonna be wiped out, right? So there's a checklist of what you can do, certain things you can do, like so your Discord doesn't get hacked, your website doesn't get hacked, so on and so forth. And then obviously you have a cold wallet, trusted developers you got to use. Now, minting issues. Sometimes people have their mint date and then people can't mint. Right? These are like very simple things, but it significantly impact the project. So if you can solve some of these problems early on, for example, just administer like a DDoS attack on your website, and then what happens is, let's say if you had like 1 million people coming into that website that you have, and the website doesn't crash, then you know you're going to be okay. One of the projects like Women of Crypto, for example, we had on the pre-sale, we had 1 million people reach the website, and the website completely crashed, right? So it's a problem. You got to really pay attention to that. Obviously, audit your contract, and then test the mint function. Now, as far as utilities, the biggest problem that I see with projects right now is that they just talk about things as if it's still last year. So, for example, they say IRL, like they have some real life events, but like who's going to come to this event? Like, what's the benefit of being in this event? Who's the speaker? How many times? How much what's the value of this? What's the benefit, right? So really fleshing out what utilities you have, like now that's the time for doing that. And then as far as hype, now I want to explain what hype means. So hype meaning, in this case, meaning having more demand than there is actually supply. Now, this is also a very important part in the Web3. In the Web2, if there's no hype, is okay. In the Web3, you need to have a hype. Weirdly enough, that's how the market works. So if you don't have hype, people are not going to get excited for your projects, right? Now, I'm not saying fake it, right? Because that's not going to work out neither. People are going to find out that's not good. But you can actually create that. I'm going to show you. And then obviously the pricing being too high, and so just so you get a sense, $500, I would say right now obviously a lot cheaper, but in ETH that's the typical price, in Solana about like 200-ish, and Cardano right now, if you ever actually looked, very cheap, right? So like $5, $10, $40, you can buy NFTs. And then now for the sake of time, I'm just gonna go quickly on these things because I wanna actually show you this strategy that's working right now. Now, obviously, I'm going to show you how you can create a waitlist and a whitelist strategy. Just bear that in mind in a second. If you know anything about whitelist or waitlist at all, just bear that in mind. I'm going to tell you how that would work out in this market. And then obviously influencers not responding. So the strategy I'm going to show you doesn't need influencers as much. You just use them for essentially like let's say people just talking about your projects and having that credibility. That's it. You don't need them to actually bring members to your Discord, members to your Twitter, so on and so forth. I'm going to move on. And then if you have a project that minting already started and the Luna thing that happened, and you're like, well, okay, what am I going to do? Right now is a good time to actually just cut the minting, call it as the Genesis collection, phase 0, whatever, and then relaunch and just have a great strategy for that. And then as far as minting date and time and so on and so forth, obviously you want, so this is a very important thing for those people who are new or even just who are just in the process. You never want to declare your mint date until you have figured out your marketing. There's no point just telling people, hey, in a month we're going to do this if you're not going to actually do it, right? And then you keep changing your mind. The community of, let's say, 2,000, 10,000, 200,000, they're all thinking about like how you process, right? How you function. If you keep changing your mind, that's not a really great indicator that people want to invest in you. And then, as far as money, yeah, obviously get investors, and a lot of them right now, they're looking, right? I'm actually speaking at this family office summit. They have 30% of their portfolio in crypto and NFTs. So people are out there investing. So just, you gotta actually go look for it. And then also trading NFTs. I mean, join some alpha groups, be able to gain some money, put it in your own collection. That's an idea as well. All right, so what is this strategy? We've got 3 minutes for this strategy. All right, let's do it. So first of all, I'm going to show you as far as numbers. So in the past, last year, I would tell people, say, hey, have 3 to 5 times the number of your collection size, and you would be able to sell out. So let's say if your collection size is 10,000, have 30 to 50,000 people in your Discord, in your community, and 33% of them would buy the NFTs, you would sell out. That's literally all you had to do. But this is not going to work at this point. I'm going to show you what you can do with that. And then with the hype, how you can generate the hype, I'm going to show you that too. Obviously, your art has to be great, utility, and then the certain things you do, let's say 5 days before your launch date, on the day of, few days after, when to actually reveal your art, so on and so forth. Those are all important things. And then also want to quickly tell you as far as the bear market, the variation. So if you actually go into the Ethereum projects that are happening right now, typically right now, I'm talking about typically. You can still have a 10,000 collection size, but typically they sell right now somewhere around 100 to 600 NFT size. That's all they can sell, most of the projects. So if you come on and actually say, hey, my project size, let's say for phase 0 or phase 1, you don't have to like burn your NFTs or anything, but just say, hey, first drop, first phase, that's the number we're gonna do, and sell out. It's way more impressive than just have 10,000 NFTs and just only sell 600 of them, okay? Second thing is qualification. I'll tell you about that in a second. And then, now, as it was being discussed, cryptos and NFTs are expanding in this universe that we're living in, right? So we're getting more and more people coming into this market. So if you can be the first person that's actually showing to them, whether it be by videos, TikTok, YouTube videos, whatever that is, show to them what NFTs are, what cryptocurrencies are, and why your NFT is the best one to actually invest in, they're going to be your customer for life. Because you just brought someone from a Web 2 universe to a Web 3 universe, right? So there's a huge opportunity with these people. And especially in the bear market, I'd like you guys to focus on these guys because they're not jaded. Versus the people like myself, and maybe some of you guys who are traders already, we've been rug pulled once or twice, right? So we're very skeptic. So maybe not focus on them in the bear market right now. Focus on the newbies right now. And then as far as the cost of advertising, I believe for like Ethereum, 0.06, even lower, is best right now. You don't want it to be higher. All right, so this is the strategy. We literally got like 1 minute for this. So essentially, what I tell people to do, this doesn't have, the look of it doesn't matter. But what matters is this. You want qualified people joining your community. So if you think about someone who has Twitter joining your community, let's say joining your Discord, versus someone who joins your Discord and doesn't have Twitter, those are two different types of people. If someone joins your, like let's say follows your Twitter, but they don't have Discord, that's a different type of person than someone who has both. Now, if someone has both of those and also connect their wallet saying they're interested in your project, now you change something in this community, right? So now you're getting someone who is hyper interested in your project. Now, if you can grab that person and tell them, hey, if you actually buy the NFT right now, or maybe contribute to, let's say, a 10% of the price of the NFT right now, or maybe let's say you buy a pass where you can buy the NFT maybe in a month at a reduced cost, now you've actually made this very certain for yourself that you're going to sell out. Because the biggest problem right now what's happening is that we see a lot of projects, they go in, have like even 50,000 people in their Discord or Twitter, they don't sell out because they don't actually know who is behind them supporting them. When they look back, there's literally no one. So you really want to have highly qualified people. And it's not because people are like weird or anything. It's just because people just trying to minimize their risk. So on the day of your mint, if they see something better, they're going to go with that project. So for that reason, you want to actually gain commitment early on. And so what you get as a result of this, you literally just get the wallet addresses of these people, the Twitter handles, their Discord handles. You can market to them, so on and so forth. Now, we talked about hype. This is the last thing. We talked about the hype and how you generate hype. So once they've done that, we prompt them to say, hey, I just did this. I just became part of this whitelist or waitlist, whichever one. And I'll tell you in a second what that means. Now, for example, if you go on this specific project on Twitter, actually research them, you see thousands and thousands of people literally just typed out on Twitter, I just did this, right?
That's crazy hype, right? Now, everyone's talking about this project. It's very exciting, right? So that's the kind of hype that I'm talking about. Now, to close this, so whitelist and waitlist, the concept is this. If you do this, and by the way, this is a specific project. We built about 17,000 people in this community in 7 days using this strategy. And we paid anywhere from 50 cents to about $2 to grab every new person, right? Just using Twitter ads. Now, the cool thing about this, they all went in and just on Twitter, they just said, hey, we just did this, we just did this. We literally did a video of showing, just scrolling down through all of those and saying, hey, this actually happened. And influencers picked up on it. It got really exciting for everyone in the project and everyone outside the project to join in as well. So after a while, we said, hey, we've got so many people that are actually whitelisted. Now we're going to have a wait list as well. Now, again, this is another thing that's important in the Web3 marketing where you want to have that hype, right? So you're going to say, hey, look, we're going to be sold out, right? So you need to be part of this. And if you want to be part of this, you want to be early on, right? Not coming in whenever you want, right? So just to summarize it for you, what's happening right now as far as selling out, you want to make it so that the cost is relevant, the collection size is relevant, and then also really, really qualified people actually joining your community, not just anyone that's joining your community. And then with that being said, if you wanted to find me, I'm on Arvin K NFT on all socials. I believe, let's go through this. There you go. So Arvin K NFT, and then also I have a lot of case studies on soldoutnfts.io if you want to read more about that too. And then I'm also going to be just hanging out here. If you had any questions, feel free to come to me. Happy to chat as well. Thank you. Cool. Thank you, man.
Thank you once again to our speaker, Mr. Arvin Kamse, everyone. Big round of applause, Mr. Arvin, with the topic of what is the key for NFT brands to make 1 million plus in a day. All right, so how's everybody? All you guys doing good? Still okay? Still good? Hope you guys are digesting a lot of good stuff today. Please make sure. All right, so we're going to move on to our next speaker. So let's get him hooked up and prepped so we can come up. So our next speaker's topic would be full decentralized leverage trading. So the speaker is Mr. Bernhard Lamp, CEO AnchorSwap Finance. So once he's hooked up, we'll bring him up on stage and start with his talks. Okay, without further ado, let's give a big round of applause and welcome our speaker once again, Mr. Bernhard, CEO of AnchorSwap Finance, to come on stage with his topic, full decentralized leverage trading. A round of applause, everyone.
Hi. Hi, guys. Thank you for being here. My name is Bernhard Lamp. I'm the CEO of the Anchor Finance ecosystem. And today, I'm going to present to you our newest development, which is the world's first fully decentralized leverage trading platform. And I talk with you about a few features, what we're going to do, why we're going to do it. And yeah, first of all, we have a lot of different features. Yeah, that means we are really the first decentralized leverage trading platform on the Binance Smart Chain. What does that mean? Our only one competitor, DYDX, is not fully decentralized. They still have access to all the funds through the smart contracts and through their migration code, what they have, and the operator code. We do not have this. In this case, because we are 2 to 4 times cheaper than Binance, and already today many people ask me how this can go through, yes? At this platform, because it's fully decentralized, the whole liquidity which is coming from the community, not from big investors, not from brokers anywhere or from anyone else who can control at least the company, the price, or manipulate the token. That means all the fees, the maker fee, the taker fee, the liquidation fee, the swap fee, and the trading fee is going back to all the people who are providing the liquidity inert of our leverage trading platform, yeah? As well, we have a multiple use piece for our native token, which is named the Anchor token, yeah? You pay less fees, you have a lot of different features which we talk later about, yeah? And for sure, it's just the release coming week from our decentralized leverage trading exchange. We have planned a lot more futures, which we're gonna release from on monthly base, which is really important to keep the hype, to keep and import the newest advantages, yeah? So let's speak about our advantages now. What is decentralization? I hope everyone knows it, but I still realized if you don't know it, yeah? Like, let's take a custody exchange like Binance and a fully decentralized exchange like we are, yeah? All the money you're borrowing if you make leverage trading is coming from the broker itself. On our platform, it's coming direct from the lending smart contracts. That means as well, also here, all the fees who get paid for trading going back to the community who are providing the whole liquidity. In that case, that it's fully decentralized, you don't need a KYC. You just open one of your decentralized wallets like MEF wallet, Token Bucket, Trust wallet, whatever, and you can connect to our platform and you can just trade leverage up to 100 times. Nobody cares from where you are, who you are, and what you're doing, which is the decentralization about, yeah? The next thing which I want to speak about and I just mentioned is the lending module, yeah? That means, as example, if you lend liquidity in the lending contract as Bitcoin, Ethereum, Binance coin, the fees also get paid in this specific token or coin. That means if you lend Bitcoin, you'll get Bitcoin back on the fees, on the lending contract. And this is how we get an APR between 10 to 40% a year based on the fees, because all the fees are not going to the broker like Binance gets all the fees. No, we distribute it to all the people. This is decentralization about, because all custody exchanges make decentralization absolutely obsolete. If I send my Bitcoins to custody exchange and the founder thinks, oh, tomorrow I'm gonna leave, go to the Bahamas, money is gone. Cannot happen here. The assets and the money is still on your own wallet, your private key, nobody has access. So if you don't send out your private key, you can't lose anything, yeah? Only if you trade bad, but I hope you don't do that. Good, then let's go to some advantages, yeah, which we have. Thank you. Oh, no, that's it, you can do the next one. Oh, the stake. Oh, yes, the staking. Sorry. You earn the interest in the token you have staked. Yeah, I mentioned it already. That means if you put it in the lending contract, the token you staked there, you will earn it. Yeah, it's not just that like in other swaps or like in field farming, you stake, as example, a native farm like Bitcoin and Ethereum and you earn cake, or you cake USDT and you earn cake. No, we do not have this sell pressure at our token because the fees get paid in those what you've traded, which is absolutely unique and at this moment not existing in the whole crypto space, yeah? Especially not decentralized. Good, then let's go for our anchor token use case, because now you heard we do it with many different assets. What is about our anchor token use case? You get a trading fee discount, depending on how much anchor you're holding, up to 60%. That means on taker fee, maker fee, and swapping and fiat cash in, cash out, we are up to 2 to 4 times cheaper than all of our custodial concurrents like Bybit, Binance, Qcoin, Bittrex, however they are named. We are much cheaper than this, and this is only possible because we are fully decentralized, based on the community, not based on big investors, not based on big VC funds. They do not control us, they do not give us the direction. Everything is self-financed. We do not have any ICO, any pre-sale, nothing. Yeah, and as well, you get the fiat to crypto exchange fee reduction. How we can do this? Because we have financial license in Europe, we have them in the Middle East, and we have e-money and providing license for sure in California as well, which is Absolutely important, because as well here, most of the people said to me, hey, but you're DeFi, you don't need a regulation. No, for sure, only because you're producing a product which is decentralized, which is very good for the customers. It doesn't mean that you don't need a financial license or a company behind it. And all these projects who are on the British Virgin Islands or wherever and do not have a docs team, it's just a high-risk investment. I don't know why people are doing this. I don't give you money in your hands if I don't know who you are, where you are based, and what you are doing. I mean, come on, that's ridiculous. But people putting it billions, yeah. However, we are doing it like a real company, yeah, because we are a real company and a docs team from up to 43 people, yeah. Good. The next thing is what we implement, because we have not an unlimited supply. We have a limited supply which will end at the beginning of the next year. So people still want to earn something, not only through maybe lending contracts, but at least a little bit more risky with other tokens. This is why we're going to implement some syrup pools. That means you stake our in-house token and you earn a partner token we partnered with. Yeah? So you still can earn a lot of API while using our native token, not only at lending, but including lending, staking, and trading it. And you save a hell of fees. I mean, up to 60% is a lot. Is a lot. Good. Then let's speak about our exchange modules. Yeah, how I already mentioned, we are fully decentralized leverage trading platform. You can lend, earn the tokens you stake, wherever you stake. We have our own charts and analytics. That means every on-chain happened data we're going to provide to you. It's fully transparent. You don't need to research it on BSC scan or wherever else. You don't need to take some Coinigi to track all the data. We have it in-house done. It's easy. As well, we took a different way in the user interface and the design part. Why? Because all these big custodial exchanges with their spot, their futures, and whatever accounts you need to have, nobody of people who want to enter the crypto space is able to understand this in under a week. So we make it really easy that people can easily join it, but decentralized and not custodial. The next thing is what we're going to release very soon, I think 14 days after this, will be our fiat to crypto gateway directly in the exchange. As well, we are building for your information a multi-chain wallet as well, but this is another topic for tomorrow's speak. Yes, we have, in case of our licenses, we have the ADGM Category 4 license in Abu Dhabi, which is an international banking license. We have a license as well in North Macedonia too, and this is why we can offer all of our customers, all in-house, a fiat gateway too. And to be honest, we don't take 5% fee or 3 or something like this. We make it just 10 times cheaper than all the concurrents out there, yeah? So take us. And the next thing is we're gonna have yield farming, and we make it a new way on it. We still have yield farming now on our Anchor Swap, our own AMM, with native and non-native farms, native pools and non-native pools. But this will change, and we're slowly gonna reduce this because the minting is not unlimited. And we're going to implement the syrup pools. This we talked already about. Yeah, we have partnering projects which we bring on the market. Those are providing liquidity on our farms. They get more attention from us, and you can earn their token, sell it, and buy more Anchor. This is the way how to do. And now, just for information, all these non-native pools and farms will be generally deactivated. First of all, to increase the API and APR from our native token, to increase the use case from our native token as well, and to have a less selling pressure, because this is the biggest issue on a yield farm. If you have, as example, unlimited tokens, like let's take Pancake, the Pancake swap, the biggest swap out there, yeah? Based on the Binance chain. They have an unlimited token supply. So what is the problem there? If there are not coming new investors and they still have the same APR, it's like a Ponzi game, yeah? Because they can produce unlimited token and suck out the market if they want to. And this is what is happening, yeah? So if you take a look on their chart, yeah, catastrophe for all people who went in last year. So our really new opportunities, the non-native pools, can be moved to our new leverage trading platform, to their lending protocols. That means it's not, if we deactivate, you can instantly move it to our lending protocols. Maybe it sounds a little bit complicated. We do it one click, so no issues, and you can still farm your APR but now based on the trading fee structure, maker, taker, liquidation, and swap fees. Yeah. Now let's talk a little bit about the Cyro pools, what exactly this is, yeah? In that case, that we deactivate the old pools to take out the whole sell pressure and to improve our own ecosystem, yeah? We have partners with many different token projects we're going to release when we go live, and there you can earn very different crypto assets, beginning from tokens to NFTs and gaming items as well, because we are developing NFT platform 2, which is releasing in about 2 months. Yeah. Yes, and how I mentioned already, we have already potential partners. Even we found here some very good potential partners too. And this about the Cyro pools. If you have any question about this, because it's maybe complicated, you can ask me. Good. Then let's talk about the team. Yes. First, let's talk here. This is Chris, our user interface and user experience maker, I would say our creative mastermind. He's sitting in front here, yes, so you can wink there. Then we have here Irakli, which is our business analyst, yeah, specialized long in the DeFi sector, very long. Then we have Rami, our project manager and our DevOps, yeah. He has very long experience in the IT, it's about 15 years, something like this, and worked as a computer and data scientist and is an ideal project manager. Then we have Arkadiusz, our co-founder and COO, as well. He's sitting here too, yes. He has 20 years experience of executive leadership. He was manager at Nestle and has big experience in startups. He invested in more than 50 startups, something like this, and exited a lot so that we can work much better together, because this is something really unique and he knows the value, so he was fast at joining. And now, the last one, that's me on the stage. Hi, yes. I'm 8 years in the crypto space. I would say it's 10, but 8 years really professional, yeah, to be honest, which is still long. I got my first Bitcoins in 2012. This is why everything is self-financed as well. Yeah, I have very good analytics skills. I have different development experience. I know Node.js, JavaScript, C++, CH, Python, then React, Pragma Solidity, so many different development languages. And I studied nature science, especially in mathematics in a laboratory for plastic technicians. And yeah, it was my dream to get a developer and have my own development company. And open finance, or at least the decentralized finance, is exactly this what I dreamed to have and to make. Yeah? And this is what we are doing here with the whole team. And now let's go to our legal context, yeah? The first company, as example, is the TCT, the crypto team in Dubai, based in the Business Bay with a DMCC license. The Anchor Finance Ltd has the HEDM license from Abu Dhabi, which is a category 4 financial activity license near the Sharia banking license. And the main development company is the Shifra IT solution. This is where I am in my second home in North Macedonia. There I've built it up. And yes, these are the company structure. All of these companies are owned by the same entities. That means Eric and myself. There are no VCs in, no capital funds, whatever. We do not want that those guys take over the control of our project. And now I come just to the next point. This is why we are not listed on really big exchanges, custodial exchanges. Because the point is, if we get them a lot of tokens that the people can trade on it, like Binance, Bittrex, KuCoin, whatever, they can easily manipulate the price. I mean, I know exactly from what I'm speaking. I made a lot of pump and dump gaming in the past, yeah, 2015, 14, with low cap coins. So it's just easy to manipulate coins with a market cap lower than 500 million, yeah. In this case, we do not go to a bigger exchange. As well, then they have a lot of things to say, do this, do that, or we delist you. No, we give a fuck on this. Yeah, sorry for this word, but we are independent and we go our way. So thank you very much for listening. If you have any questions, we have still 5 minutes left. If you want, I can still talk a little bit about the ecosystem, maybe about the multi-chain wallet we are developing and releasing in June, August. Let me just mention that shortly. will be a multi-chain wallet named the Anchor Link. Yeah, it's an absolutely non-custodial wallet, which also has all the features of the Anchor exchange and the Anchor swap. Means the trading, means the swapping, means the fiat cash out, means the lending, means the farming, means the Zero pools, and especially, we are on all EVM chains at the start, and because of our own chain switcher we built, we can easily implement any other non-EVM chain. So this is what is coming right after the Anchor Exchange. We release the Anchor Exchange next week. Anchor Swap is online since last year on Friday the 13th in August. The wallet is coming 1 month later, 2 months, and then the NFT platform as well 2 months later. And then we have an all-in-one financial solution for everyone who wants to enter crypto and even has no plan about it. Because to use our applications is absolutely easy, and we go a different way than all the other projects. Thank you very much for your attention. Thank you.
Thank you, Mr. Bernhard Lem, CEO at Anchor Swap Finance, with the topic Full Decentralized Leverage Trading. Okay, so moving on next to our next speaker with the topic of what you build in the metaverse must benefit the real world and not only profit a few thorough speculation of digital assets. So let's welcome Elias Tan, Director at Singapore Tembusu Tech Innovation.
Hello. So, I'm not here to sell anything. I'm here to talk about building something that lasts. Maybe I can give some background. I entered into the crypto space in 2017, and that's where I made my first bunch of money, you know. And I've been through the cycles, and I've come to a place where I'm looking at the metaverse now, I'm going, are we building something that has real utility? Are we truly building things that truly benefit our world now? And actually, it's very interesting that the recent crash has really exposed a lot of things that are being built for the metaverse, are not benefiting the real world, and have shown themselves to have really little intrinsic value. So then my question to whoever has been building is that, are you here to serve? Are you here to extract? Or are you here to dominate? Or more specifically, whatever has been recently dumped has shown to only benefit a bunch of individuals financially. In the past, yes, I was one of those individuals who has benefited. I'm an example of a millennial who started his first blockchain company when he was 24 years old and made his first $1 million in 6 months. My parents were really proud. I bought my first penthouse. I bought my first supercar. I drive a Ferrari. But all this doesn't matter if you don't build something, or you're not remembered for building something that lasts and build something that's sustainable, if you're only in for a short-term game. And that is something that I learned recently when I was with a group of Ferrari owners. And they told me, Elias, what are you building in the blockchain space? Are you building to sell, or are you building to keep? And there's a big difference between someone who builds to sell and someone who builds to keep. Let's say there are two developers and somebody builds a house. This guy builds with all the cheapest materials and he builds to sell. And then there's another person who builds to keep. He uses all the most expensive materials and he builds without intention to sell. He builds without an intention to market make and an intention to dumb eventually to cash in on all the retail investors that have lost recently. Well, I didn't lose anything recently because I was out of the market about the beginning of this year because I saw there was going to be a huge economic downturn. And that's a lesson that I had to learn through the 2017 up and down. So perhaps you could say that a lot of the NFTs that are so-called being built for the metaverse space are just crypto 2.0. People who were not able to make any more money from the ICO pumps and dumps in 2017, they just switched to a new medium. Okay, now ICOs don't work anymore. Let's launch NFTs and let's build it for the metaverse and let's repackage it and restart the whole speculation process. And you pump and you dump. And come 2022, having been in the industry and investing in quite a number of technologies outside of blockchain, I asked myself, have we as a community truly grown to a place of maturity where we are really building the applications that we are building to keep and not building to sell? Which brings me to my point on what's being built in the metaverse. It really, really needs to benefit the real world, have intrinsic value, and not be used an excuse for another pump and dump. I mean, everybody who I know a lot of people who own apes. You either own apes or you own or people normally own apes. They have lots of RM watches, Richard Mille watches. And when they asked me to buy, they said, just buy because you will make lots of money. And I'm like, well, fine, you know. And they say, so what's the utility? Well, it's community. And a lot of people are also saying, yeah, and when you build NFT, you need community. But the community just wants to make money. So what kind of community are you building? What is the order in which we should be going? Should we be building community just for the sake of building lots of trading volume, lots of liquidity, or should we be building community for a very, very important purpose? So at the same time, I understand that it's important that a network of good 3D virtual worlds, and there's a lot of new and valuable data that's going to be mined from our interaction with metaverses that are being built. And with a growing telecommuting trend, a lot of people rely on virtual spaces and digital modes of communication, like video and web conferencing to socialize and interact online. And to take their existing digital experiences to the next level, the metaverse brings us a range of real-world capabilities to users in a 3D immersive world, and that's good. But NFTs are not the only thing that we're in it for, and the money-making opportunities. How does it really benefit our real world? So some of the things that I see being built, yep, they have the ability to address all the existing challenges of remote work, which is good. It provides managers with a virtual environment where they can meet their employees, communicate them, read their body language, and retain in-person interaction. And moreover, the employer can also resolve problems like in-time theft and gold bricks at the workplace by keeping track of a virtual office. There are great tools that are also being built for healthcare professionals and medical staff who were previously unable to visit patients due to their geographical limitations. Great use case. In the virtual world of the metaverse, they can interact with a patient and have clear insights into their health conditions. Games, great use case, but unfortunately a lot of it has been abused. Most metaverse games are decentralized with an integrated economic model to support play to earn gaming. And such games, great. They allow users to play, buy and sell, and trade in-game assets in the form of NFTs. And all power to those who understand and believe that, yes, we shouldn't be having all the in-game assets owned by a singular platform. And I understand that. But there's something interesting that I'd like to share with you today, which is a use case that I'm building that at the moment has no NFTs nor any tokens involved, but building an experience of virtual shopping for real assets. These are my current clients. No NFTs, no tokens at the moment, until we can figure out how this will be truly beneficial for the market. Because if we were to include NFTs and tokens into what we're doing now, let's say I asked Chopard to include NFTs in the global retail metaverse shop that I'm building for them. If I'm going to include tokens, it's just too much risk. But what we've built for them is going to be put into a scalable platform that I believe will last. That is changing the way that we engage in sales, changing the way that we interact with our customers. And for some of these clients, like Piaget, they have 2 appointments a day. We built a metaverse experience for them, and now they're having 4 appointments a day, and we're able to track the increase in sales. That's a real-world benefit. This is a shoppable metaverse that we also recently built for Christian Louboutin. We had 235 participants come in from the media, VIP clients, to showcase their new product launches, to showcase what they're doing. And then you have an in-person sales assistant to help you navigate the space, engage in a brand storytelling, and then have the customer come and purchase the product. This is something that we can't really monetize. I mean, yeah, this year we've secured $2 million in contracts from these clients. But we're not moving into the metaverse space. We're not moving into the NFT and token space yet until we can discover a model that really works, a model that would not be subjected to pumps and dumps, a model that will not subject retail investors to lots of hype. And only at the end of the day, when everything is dumped, all the money is in a bunch of supercar owners that I hang out with, or a bunch of guys who hang out in Sentosa and have Rolls Royces in every single house that they have. So my speech today is just going to be very short, and I'll leave you with a question. If what you're building is for the metaverse, what are you building, and does it benefit the real world? And are you building it to keep, or are you building it to sell? Thank you.
Thank you once again. That was Mr. Elias Tan, Director at Singapore Tembusu Tech Innovation, with the topic, what you build in the metaverse must benefit the real world. Okay, and not only profit a few thorough speculation of digital assets. Okay, so since Mr. Elias finished a bit earlier, just give us a short break, 2 minutes, get you guys relaxed, digest a bit. If you have any questions, you like to interact with Mr. Elias, or you want to ask him, you can do so, and we'll be back with our next speaker. Hello everyone. Once again, welcome to BlockChain Fest 2022. How's everybody? Again, only 1-2% only. How's everybody? Nice. Come on, you got to be more excited. You know, you got another, let me see, another 3 more speakers to go. All right, lots of exciting. Give yourself a big round of applause. You guys are really fabulous. Okay, also to make sure to show some support and love, applause when we invite the speakers too, okay? So, without further ado, let's welcome our next speaker with the topic, Unlocking the Freedom from Decentralization in the New Digital Economy. Let's welcome Mr. Jin Gonzalez, Oz Chief Strategist and Founder. On stage. This is where you all applause. Thank you.
I think, is it working? It's on. Yeah, it's on. Ooh, I think this is going to fall. Okay. Hi, everyone. So, just wanted to say hello. It's a pleasure being here. And I think all of us are present right now due to specific technology, right? Blockchain. But to start, I'd like to ask everybody in the audience to think of one thing. Do you remember the time when you heard about blockchain for the first time? Do you guys remember that time? And I have a question. When you heard about blockchain for the first time, did you think, oh my God, I can be a billionaire with this? Was that what you thought? The first thing, oh God, I can make so much money with this, right? Or was it that it represented something more than just money? Because I'm asking a more philosophical question here. Does it represent financial gain to you, or does it represent something that is more significant and more meaningful, not just to you, but to your children, to your family, and to society and humanity in general, right? And I guess you could say, it's money, right? Or you could say it has more meaning. What I notice is the ones that listen to us at the beginning, in other words, when I hear about the technology the first time, they always ask, what does it do for society? What does it do, right? Not how much does it make me? But the ones that have been in blockchain for quite some time, for some reason, the underlying objective of blockchain has been blurred. They don't seem to see anymore what the technology is supposed to give. And that's unfortunate because, I don't know about you, but are you currently disillusioned with pump and dumps? I mean, does anyone here feel good when they hear about the abuse of the technology, a rug pull, or anything of the sort, right? And in some ways, we've all been desensitized. I'm sure you'd agree. In some ways, we all have been desensitized by all of these events that have occurred in the past months, years, and so on. So when I got into blockchain, I remember I initially did it as the head of blockchain digital assets for the largest digital bank in the Philippines. They didn't even hear about blockchain then. I'm 20 years an entrepreneur, 25 years an entrepreneur. I got 6 exits, 6 startups, 2 exits, one of which I sold to a NASDAQ company. And my involvement in blockchain came on the condition that I had a free hand, and I had a very good relationship with the chairman of one of the largest banks. It was an amazing experience, right? But it's also quite strange working on a technology that is supposed to free you from financial institutions working for a financial institution. Doesn't that sound a bit weird? There's nothing wrong about it. Financial institutions are there for a specific reason. They serve a purpose, right? But do you guys enjoy your relationship with your financial institution? You say, yay, I am so happy I am being charged by a bank, right? They serve a purpose, yes. But I'd like to ask you, did blockchain represent freedom from financial institutions and freedom from over-regulation? Ask yourself that question. If that struck you at some point. Now, freedom from over-regulation is yes, but regulation is not bad. it's actually good. You know, privacy infringement is bad, but asking for your data to give you specific services is good, right? Taxation is not bad. Over-taxation and taxation where the funds are used for other purposes other than for your benefit is not good. So it's really the abuse. And what the technology represents is freedom, wherein you achieve a certain degree of privacy protection, a certain degree of regulatory cover, and a certain degree of not tax-free living, but more of tax-reduced living. So I have another question for you. Is there anything since blockchain, or even with blockchain, where you are able to receive these three freedoms? Can you think of any token since you began that gives you privacy protection, regulatory cover, and tax-free living? Is there any token out there that gives you anything that has to do with these three? Can anyone raise your hands and tell me right now that there's something out there? None, right? Now, I think it's really unfortunate that we're in that space. But this is what we did. Oh, that's my disclaimer, by the way. We saw that there's so much disillusionment in the world right now. Everybody's either against blockchain, for blockchain, against the technology, for the technology, against tokens, for tokens, right? At the end of the day, you're still subject to regulation. If your government taxes you 80% today, can you do anything about it? Nothing, right? You're still living there, correct? It's okay if you get taxed, as long as it comes back to you. I don't mind paying taxes, sure. But if there's unclear regulation, and all of a sudden they specify regulation, or they say it's outlawed, but in the form of overtaxation, if I tax you 80% for your crypto transactions, is that the same as making it legal? Indirectly, yes, it is. There's lack of freedom, lack of privacy, and if there's a disconnection. And tell me if you see this, right? Is there a disconnection between the technology that's being presented to you and real life benefit? Do you see your life fundamentally changing at this current moment, 12 years after blockchain has come? Maybe with the wealth that you've amassed, but does it actually really change your life? So the question we asked was, where are these freedoms given? Those three. Those three. Turns out these freedoms are already actively given in over 5,400 what you would call special economic zones throughout the world. 5,400 of them. It gives a certain degree of privacy protection, it gives a certain degree of regulatory cover, and it gives a certain degree of tax-free operation. And the only thing is, it's available to large corporations. Are you a large corporation? Do you have billions of dollars at your disposal? Most of us don't. Actually, the vast majority of us don't, right? So why is it that these large corporations enjoy the benefit and the individuals don't? But the truth is, we as a community are very powerful. The only thing that's missing with us is the spear. Are we directed in a specific way where our beliefs are channeled for a specific purpose? Do you guys see unison in what we say as a crypto community? Do you see it? Unfortunately, well, maybe you might, but on a personal basis, I really didn't see that much of it. But what ecozones give is they give these three freedoms. It just needed a point of negotiation to be able to communicate what these zones, what the community gives, and that meets the requirements or the needs of an ecozone. So our journey actually all began when we engaged an ecozone under the Philippines And we said we would like to be able to apply for an exchange that would bring capital into the province of Bataan. This was in the Philippines. We were lucky enough that the governor, the congressman, the administrator, the deputy administrator, and the chairman all believed in what we could bring. And we organized a group or a team of experts that specializes in bringing investment into ecozones. They gave us the license to operate an exchange, but as you know, exchanges, they're expensive to operate, right? Not only are they expensive to operate, other exchanges are competing with other exchanges, and it's very difficult to be able to compete with an exchange that gives $1,000 to you in order to trade in their exchange, not knowing that the whole system is actually geared to get the money back. Right? But of course, we only realized that once we set up the exchange. The question that we asked ourselves always was, is what we're doing bringing those three freedoms forward? Right? So you have to have a guiding light. It can't all be all about money. If you look at money, you get lost. If you look at purpose, then you find your way. So we always find ourselves looking for our way. And the exchange was the first step, because this exchange required us to amend the Constitution. It required, or at least not us to amend it, but we had push support for digital assets. We had to push support for the implementing rules and regulations in order for us to get the exchange in place. But what this taught us is that regulators are not evil. They're actually pretty good. They're just human beings, just like you and us, you and me. They have a mandate for the greater good. The question is, will they listen to you and will they align with you for the greater good? So, what is it exactly that Oz delivers? So this is our negotiation, sharing with you the story. We said to the zone, hey, I will, sorry, it's the other way around. What is it exactly that the eco zone can give you? Now tell me if this resonates, okay? It turns out that they can give residency benefits for investment. It turns out that they can give near zero tax living through a single person corporation. It turns out that they provide regulatory cover because these ecozones have its own tax regime, it has its own policies, it has its own laws that follow the national government but are different and catered to a specific industry or technology. And it turns out they do protect your privacy. Key. So what is it exactly that we can give that they need in order to establish the barter? Well, we said, hey, if I were to sum it up, I give you capital, I give you credit, I give you community. We are a $3 trillion community. We're a $3 trillion industry. Second, we're great at providing credit. DeFi, what's the best example? Invisible credit. I don't have to go through six months or 3 months of reviews for my credit history. I represent a community that wants specific freedoms that you can provide. And we have the capability as a community to provide a master plan. We're really good at doing white papers. We're too good that we can actually use it for bad. But we're good at it, right? So we can provide a master plan in order to structure you, right, for investment. Giving these capabilities, or this barter, then we establish the exchange. The first partner among many partners is the Freeport area of Bataan. It's the largest and most progressive ecozone in the Philippines. You don't know this, but out of 5,400 ecozones, around 540 of them belong to the Philippines. It's the second largest producer of ecozones in the planet. The largest is China. Now, I don't know about you, but who would like to locate yourselves in China? Some would, right? But does it give you the three freedoms? Some might think it does, some might think it doesn't. You be the judge. But in the Philippines, We have specific rules and regulations that allow for this. And not only that, if you have the largest democratic country falling behind such a technology, drafting regulations specific to it, to enable a pure open zone enabled life, then it's possible to spread this to other countries. That's what the initiative has grown to. It's beautiful. But you don't need to live there. See, the question that you ask is, do I need to live in the country if I avail of the benefits of the zone? Okay. So what do we do? Well, we established that our objective is to help the zone as compared to many other zones. But we simplified it to a point where it seems ridiculous. Okay? So I'll tell you what the product is. And it's so simple. You purchase a token that's recognized as an investment. You stake it for a specific period of time at a specific amount. And should you pass KYC, you become a resident without you needing to live in the country. You can live anywhere. And you have a single-person corporation set up under you where you can live your entire life through in a tax-free environment. What was normally available to large corporations was simply shrunk down to you. That's it. Just you. So what a large corporation enjoys, you now can enjoy through a simple staking agreement. That's all you need to do. So what's involved? Incidentally, the coin's called Toto's token. It's Oz. It's like the Wizard of Oz. And we were thinking of it like, hey, the first one that came into the tornado was the dog. So we called it Toto's just for the fun of it, right? But it has a serious meaning behind it. By purchasing the token and staking it for a specific amount and for a specific period of time, you gain tax-free residency, business operation, in a privacy-protected, regulation-covered environment. The three freedoms I initially told you about. There's no token out there that gives you that until today. And you might think, is that legal? Well, we launched the token in Dubai, and right beside us were the regulators themselves, the administrator, the chairman. It was officially launched and endorsed by the government. If you go to afab.gov.ph, you'll actually see us there. It is recognized as an investment. And we are taking the initiative to all other zones. Our objective is to establish a network of eco zones around the world to give you, to give us, to give the community a portable life. In other words, our objective is to have complete portability of residency and business operation within 60 days. We're very specific in what we want, thereby giving us the freedoms that we need. We're not here to run away from disclosing our information. We want to disclose our information so that we exclude those that want to hide their information because they want to hide things from their past that are not favorable, that we don't want to identify with. We don't want our children to identify with. We have no problem being regulated, but we do have a problem being locked in because I have a virus locked in my building, right? We don't have a problem with paying tax, but I need to know that that goes back to me in some form or another. The question is there a way to know that? And that's what Oz really is about. What is it exactly that we have in plans moving forward? Well, I won't bore you with the structure of what we give, but I'll give you a visual, okay, of what it represents. Remember, when you say, this is my city, okay, does it mean anything to you right now? Do you actually believe that this is your city? Do you own a piece of it? Or are you paying to live in it? Right? Does it actually come back to you? Do you actually have a real say in where it's going? When you vote for the people that represent you, are you sure that they represent your interest or their personal interest? I mean, these are real issues that we're all facing right now, right? The truth is, we don't know. Do you guys really know if your representatives represent you? I don't know. I'm Filipino, and I can tell you right now, I have no idea. But it would be great if we did, right? So the way Oz is being structured is we are in process of establishing an entity in Switzerland. That represents the DAO. And the DAO exercises ownership over all assets under it, which brings back complete ownership to the community themselves through the DAO that is represented through a FINMA and FINRA approved association. We are still in process of getting this, but we will get it. We want to bring to reality, and when I say reality, your life, what you experience in life, what blockchain was supposed to bring. The other image I want to leave you with is not a metaverse. The truth is, what does a metaverse represent anyway in all its forms to date? Can you really hold a digital world? Can you really live in it and be happy? Is it really scarce when somebody can just copy it and make another one? Or is it just advertising and marketing? What we believe is there has to be real scarcity. The metaverse has to be represented by a physiverse. And I have to exercise ownership of the physiverse by ownership of the metaverse. That's what we're building through all of the partner zones. We don't just approach a technology for what it gives and then try to find ways to combine it, slightly improve it, or copy it. It has to have real-life application. It has to have real-world benefit. And if you don't go for the real-world benefit, it's not worth going for at all. The first application is simple. I purchase a token, I stake a token, and I can gain residency and tax-free living through a single-person corporation legally. That's the most important part. In full disclosure of my government. We are not here to hide. We are here to show everything we do, but we want to do it legally. And we believe that we can work with regulators, and we have displayed that we can. Regulators are willing to discuss amendments to law. It just has to represent the greater good, and you have to be able to communicate with them their mandate. So that's the life that we want to bring, and the first benefit of which is Oz. So to summarize, what are the 3 freedoms? Well, or actually 6, more all in all. First, you don't have to worry about excessive tax. You get to live through your corporation. What you would normally experience as a large corporation now is available in the individual. You don't have to experience unclear regulation. Why? Because the regulation is very clear. And if there's no clarity, the Oz community negotiates with the government in order to come up with regulation. At this point, we are drafting regulation, which is an improvement of 6 regulations to come up with a unified version. That then will be turned into a product that can be owned by the community. You get to live anywhere you want to live. In a member zone, you can unstake and restake in another zone. It seems like it's pie in the sky, right? But it's sure better than the pump and dumps that's in existence right now. You get to grow your wealth internationally. Why? Because you get to invest in digital assets, and you get to influence regulation and work with regulators so that they can digitize the asset legally, and you can own the asset legally. It doesn't have to be made in the digital space purely. You can have underlying value. Next, if you receive your residency and business operation, it comes without any fees. You stake it. And the way the token is built is that the use of the token directly contributes to the cutting of its supply. You know as well as I do. You cut supply, what happens? You be the guest of it, right? I won't tell you what happens to it. But if you cut supply in half, what happens? If you cut the half in half, what happens? If you cut it half again, what happens? It only takes 240 people to avail of residency and business operation to cut it in half. 240. But there are 58 million millionaires out there, 5.4 million of which, or 5.1 million of which were just added in the last 12 months. How many of them would be interested in something like this? 240? 500? 1,000? 1%? You guess. I'm betting maybe more than just a couple. It also allows for your assets not to be landlocked. Because I'm owning a digital asset, I can unstake it and restake it somewhere else. I can move it anywhere I want. It's not investment in real estate. It's investment in an asset that's recognized by the country, which I can then unlock and relock somewhere else, transfer it. And it's residency portability. That's the end goal. Now, is this in existence right now? Well, you know what? It is. In fact, it's everywhere. Every country has a residency program that exists. But the question is there a blockchain-enabled residency program? Is there a program that by which the purchase and the staking of the token to gain residency in business operation directly contributes to the scarcity of the token? And by contributing to the scarcity of the token, based on a need that we all have, the question is the value going to be worth our time and our effort? We believe that's so. That's us. I hope I'm here for some questions, but I hope that I was able to share our vision with you, and I'd be more than happy to answer anything. Thank you.
All right, once again, Mr. Jin, thank you very much. That was unlocking the freedom from decentralization in the new digital economy. Okay, let's invite our next speaker with the topic of decentralized audit and arbitration based on proof of expertise. Okay, so let's welcome Mr. Yas, CEO at CR Square Finance. I'm trying to pronounce his name right. I'm pronouncing the others wrongly. Sorry. Let's welcome once again Mr. Yas, CEO at CR Square Finance. Round of applause, everyone.
Sorry. Thank you. And this is next. Okay. Good. I hope, yes. Yeah. Good evening to everyone. Thank you for the introduction. I hope some of you or any of you have seen the series, Netflix series, Lost in Space. Okay. So basically, it's a series about a human colonization in outer space. And one of the lead characters in the series, basically, who has designed the security systems for the space shuttle, which is actually traveling, taking the humans into another colony across outer space. At the time of its complete malfunction, systems failure, uses a line that math does not account for human error. Yes, our entire decentralized world relies on algorithms, but these algorithms are designed and audited and verified at many extent possible, there is a human intervention involved. So how do we reduce or minimize the risk of these human errors to the extent possible? So most of the organizations, the critical thinking capabilities or strategic decision making or the willingness to take the risk, that can be programmed into algorithms, right? That is the human nature and human attitude which actually gives us that decision making capabilities. But even in the most decentralized organizations which are automated, there is a chance that these human errors can actually lead to disastrous events in the blockchain world. If you take, for example, the recent Terra crash, actually, It's not the mathematics which has failed, but it's the economics which has failed. So the algorithm was good enough in printing the tokens actually subject to more stable coins are printed, but the economics failed because it created a hyperinflation, and that by reducing the Luna's value by itself. So my topic is about how can we use the proof of expertise model where consensus can be achieved by involving multiple subject matter experts to take decisions or to get a consensus check across 3 specific areas which we would like to discuss about on due diligence, on audit, and arbitration. Coming to that, there is no dispute that collective efforts are always yield the best results than singular efforts. But in order to achieve, sorry, if I'm blocking this one, in order to achieve success in collective efforts, you have to arrive at a consensus. The decentralized ledger systems or distributed ledger systems or the blockchain technology has ensured to create algorithms which arrive at this consensus over the years. But what about those activities which definitely need a human involvement? How do we make that into a consensus model? That is what is called, that is the concept of proof of expertise. So I understand that all these algorithms which has emerged over the years in blockchain technology, proof of work, proof of stake, delegated proof of stake, where basically the members don't have the capability to run the infrastructure. So all these are infra-model based consensus algorithms, meaning they run based on infrastructure which provides the hashing power or delegates the power to verify the transactions and approve the transactions on this one. But as I discussed earlier, what about those activities or critical thinking capabilities like customer relationships, risk management, treasury management, which involves human involvement actually. So when humans are involved, and that too you put the reliance on single person, there is a chance that there is a human bias and thereby leading to human errors. So what is proof of expertise and how can we reduce this human error to the maximum extent possible? So as I told you earlier, when on a recent Harvard review, basically, they have made an analysis of more than 1,500 companies. They said, when humans are integrated along with the artificial intelligence, together they yield the better results. So we understand that these solutions require, an element of human expertise. So basically, proof of expertise is similar to a proof of activity and DAO governance models, which are then combined where subject matter experts which are relevant to that particular fields, like audit, finance, investment analysis, M&A mergers, designers. It can be, the areas can be expressed to all the areas where you need advisory from a multiple set of individuals who are experts in that fields. Our understanding is that most of the decentralized ecosystems or DAO governance models rely on the DAO members to vote on proposals. But most of the proposals, when voted actually, the DAO members tend to go to the majority way, meaning they don't have the subject matter expertise to take the decisions by themselves. So wherever the majority voting goes, they actually go into that voting model. So if you take example for Uniswap, which I'll come into later, Uniswap has a 3-layer check where a forum discussion happens, and next a consensus check happens, and afterwards it goes to governance voting proposal. In the consensus check, if you have seen if any of you have been involved in the governance model, you check that in the consensus check, maximum 3 to 4 voters who actually have 80% of voting power actually vote on the proposals. That means it is just 3 people who are influencing the decision of entire Uniswap governance, which holds more than $25 billion worth of valuations, liquidity in total. So 3 people are taking the control over it. So how do we, basically using proof of expertise and these subject matters, act as a consensus layer to reduce the human risk element to the possible to the maximum extent? So at CR Square, basically, we were trying to create a consensus model using subject matter expertise for various proposals, funding proposals, valuations, or this one. How do we do that? We were thinking about using an on-chain KYC or Polygon-based, ID-based. For example, how do you verify if I'm a Sharma, I'm a chartered accountant, I'm a CPA from India, so I have skills in the finance, investment analysis, virtual CFO services, analyzing financial statements. So how do you verify without any kind of centralized solutions that whether I have the relevant expertise and skills? So at CR Square, as I told you, we were initially planning to issue on-chain KYC using BlockPass or Polygon ID, and then even issuing an NFT to these subject matter experts to verify their on-chain real-life experience on-chain. But then Vitalik Buterin actually solved that issue for us when he actually issued in 11th May 2022, recently, just 3 weeks ago, he co-authored a paper by issuing a new standard token on Ethereum called soul-bound tokens, which are called SBTs. So SBTs are basically an NFTs which cannot be transferred from a wallet at all. So the NFT relies on the initial wallet which is it issued to. So let's say my relevant experience and skills are so and so defined, and somebody, when a certified agency, in future even institutions, organizations, even Harvard educational institutions can actually award certificates or skill sets to people using SBTs, so that will be my permanent on-chain record. So that way, we can actually verify whether these people have the necessary expertise or skills on-chain without having any kind of centralized solutions. So how is the model process done here? Basically, it can be any DAO or Web3 app or even centralized institutions which can issue soul-bound tokens to subject matter experts, can be any field relevant to. If you're a musician, you can be issued an artist certificate. If you're qualified from Berkeley, Berkeley can issue an SBT to you that you have qualified from Berkeley. So in future, if NFT artists want to create an NFT, so the possibility of duplications and scams can be reduced to the maximum extent possible. So that means using this advisory subject matter experts and having their on-chain record, we can use them for multiple consensus solutions where the DAO members, or basically DAO token holders, who actually can't make the relevant decisions can actually rely on blockchain using these subject matter experts. For example, if any of you worked in the MNCs or any of the large-scale organizations, the board of directors typically don't take the end-to-end decisions. They have advisory committees, procurement committees, finance committees, treasury management committees, or investment M&A committee. So these committees consist of the relevant experienced field. So it is not necessary that the board of directors consists, if it is an engineering construction company, it is not necessary that that company board of directors should be an engineer by himself or involved in construction. But he can take an advice from the construction team or the construction committee who will say the final yes or no. Of course, the concept of taking a yes or no in the business model lies on the board of directors. In a similar way, in a Web3 DAO-based model organizations, the DAO members definitely need not take the decisions by themselves because they may not know the in-depth issue of the matter, or they may not find the time to actually participate in the complete governance of proposal. We can have a layer of consensus check or advisory level for every DAO, like investment DAO, for example, can have a due diligence committee which can actually vet on the proposals before it is put to the governance vote. So meaning, in all the investment DAOs, decentralized VCs or this one, until now, with the due diligence which is actually centralized or reliant upon 2, 3, 4 individuals can now be spread out across to multiple subject matter experts who actually will be independent. Anybody, it can be anyone from India, Europe, or any of the continents spread across. They all can come together, arrive at a consensus, yes, this proposal can go, yes, we recommend this proposal, or no, we don't recommend this proposal. That way, the DAO members will have a better decision-making capabilities. In that way, we can definitely reduce the maximum extent of possible risks and rewards in the decentralized environment. So what are the use cases? With examples, basically. So as I told you, this can be this concept of proof of expertise and consensus model can be used in any of the areas, not just only, it can be used in GameFi, DAO governance models. But at CR Square, we were focusing on 3 specific areas. One is the smart contract audits, the donation audits, philanthropical audits actually. How do you verify whether the money which has been given by a donation DAO is being actually spent in real life? So instead of relying on one set of individual, you can because the one set of individual can be their bias, or can be manipulated, or can be misutilized. So that is not possible when you have consensus of multiple people. We can have a tokenomics audit, whether the tokenomics are relying upon how the tokenomics are evaluated, whether it's a correct model or not. We can have a DAO financial audit. How is the DAO performing? How is the DAO's treasury managed? This can be, instead of relying on one single set of individuals, we can have it in multiple sets. Even in case of smart contract audits, currently all the smart contract audits are done by centralized institutions, meaning your smart contract which you're relying upon is actually reliant upon 1, 2, or 3 individuals who are actually verifying the smart contract whether it's functioning or not. So that's risk. Even though in a decentralized environment, you're actually putting the risk upon 2, 3, or 4 persons. So that can be decentralized. Instead of 1, 2, 3 persons doing the smart contract audit, this can be spread across 10 to 15, 20 validators across the world who can actually give a rating for the smart contracts. And based on that, you arrive at a consensus whether this is a good project or not. Similarly, in due diligence, basically for grants program, if a project wants to issue grants, how do you verify in the most decentralized manner which project is eligible for the grant program? Investment DAOs and DVC funding, as I told you earlier, most of the decentralized VCs and investment DAOs in this space, investment clubs, have maybe decentralized in crowdsourcing the funding, but actually centralized in the concept of due diligence. The projects which are vetted by them are done mostly by 1 or 2 individuals. So obviously, if a particular research analyst is only favorable for GameFi, he may not consider an infrastructure project or the DeFi project, actually. He may not look into that. So that way, that aspect also can be decentralized using the consensus model and subject matter experts as a layer before it goes to the DAO voting. DAO subcommittees. So DAOs can have a procurement committees. For example, Uniswap can have a procurement advisory committee if the Uniswap wants to hire UI UX engineers and delegate a certain grant for UX to improve the Uniswap model. Wonderland DAOs. There are so many DAOs which are there in the market right now which has very good functioning governance communities. But most of them rely on the majority voting, meaning the minority voters who hold around 10, 20, 30% always tend to go where the majority decision goes. That can be avoided by way of an advisory level check in form of consensus in a layer 2. So that way, also it can improve the DAO governance models. Arbitration, decentralized escrow services. Most of the escrow services right now rely upon centralized models where in case of a dispute in a escrow service, the dispute is resolved by centralized persons or one single individuals. That can be expanded to multiple level of individuals for consensus model. On-chain trade disputes, DAO governance disputes. So all these can be the major use cases for the proof of expertise concept with a consensus model. So a case study of we did a case study of who is actually implementing this methodology, but not necessarily in the same format as we are doing it. So Cardano has a project Catalyst program, which is basically a grants program where multiple people can come up with ideas. You can just post the ideas on the Catalyst. And then they have a concept of community advisors. Basically multiple set of individuals. Anybody, even if I'm the field, I can also become a community advisor. But you need not be a subject matter expert. So the community advisors will go on check and read all the proposals. Recently, they had in the recent fund date, they had more than 1,500 proposals which have come up, of which 400 proposals got funded more than $10 million. So of the community advisors, nearly 1,500 proposals have been verified by community advisors, reviewed and rated on a ranking mechanism. Then the founders get a chance to refine their ideas. And finally, there is a veteran community advisors. Basically, if you are in the Project Catalyst program for more than 1 year or 2 years for 3-4 cohorts, you can become a veteran community advisor. And you will give a final rating. Based on that final rating, the ADA token holders have eligibility to vote on proposals which have got the highest rating. So that way, these community advisors and veteran community advisors are acting as a layer of due diligence check and also advisory for the grants program to be utilized in the best manner possible. And I hope this is a bit congested, it's clear, it's okay. Yeah, I think it's the PPTX file is not properly analyzed. And so there was, when we were actually going through the DAO governance issues also, Uniswap and Wonderland had, these were the most famous DAOs. Wonderland is an investment DAO which manages close to $200 million. It was actually managing more than $1 billion after a mess up that one of the treasury management owners, Mr. Shifu or so name, was actually involved in the Canada's exchange loss, which resulted in $200 million loss. He was one of the background members for that. When the community came to know about that, the entire token was dumped and the money was removed, and the investors lost nearly 90% of their value. So today, they are actually fighting to appoint a new treasury manager for almost 3.5 months. It's $200 million lying idle without a treasury manager for more than 3 months. Why do you need to rely? So one of the Twitter, even the community, if you go through the forums, one of the persons clearly identified that why should we have one investment manager? Why can't we have multiple investment managers and actually give a reward-based program within the community investment managers? Why should rely on one single individual? That's the question. So these kind of investment DAOs, even in case of Uniswap, what was idea as per the Uniswap was governance model is very simple. It's a set of 1 to 4 steps. But what's actually happening on Uniswap governance model is hundreds of steps. Even Uniswap made an agreement with Polygon to have a $100 million grant program, which is almost after 6 months, they've still not received the money. Meaning, there is no proper communication channels. So even though how much our automated systems they are, there should be some human element involved in making the transactions happen, even in the DAOs or the Web3 space or the most decentralized environments. So that problem can actually be sorted out using the consensus model and having subject matter experts of those relevant fields in not just one number or 2 numbers, in possibility of n. The possibility of n can be any numbers. And based on that, we can actually achieve truly decentralization even in the most decentralized environment. Basically remove the small element of centralization even in the most decentralized environments. So what's the advantages? Obviously, you save a lot of time. As I told you in previous slide also, Uniswap took around 6 months to actually even follow up with the Polygon grant program, which was not done. Wonderland actually had 3 months of time gap with no treasury manager with $200 million funds lying idle. They still have not voted on the issue. They are discussing on forums on a continuous basis. So these discussions can be reduced if there is advisory committees. And directly you can go from a forum discussion, advisory taking a decision consensus check, and you can go for voting. Instead of the discussion being elaborated to a span of over months actually. Number 2, save money, obviously. The amount of losses DAOs, these token, because every DAO is reliant on a token, and if the decisions are delayed, if the money is not properly invested in for, obviously it will result in the fall of the token's value, and it will lose to lots of investors will lose the money. We have seen multiple in this current bear market. We have seen so many of those tokens falling to a drastic 90% or more. That is because of the function, not because the project is good enough, but because of these functionality issues in these DAOs. Then reduced bias. Basically, if you are relying on a single set of person or a centralized set of individuals, there is a bias towards particular decision making. That using a proof of expertise, subject matter experts on a consensus model, you can reduce the bias to the maximum extent possible. And improve decentralization. Obviously, when you reduce the bias, it improves the decentralization and reduce the risks to the maximum extent possible. So what are we doing at CR2 Guardian, basically CR2 Finance, is that we are relying upon this subject matter experts or independent validators we call them, or in our platform we call them guardians. Currently our product is built towards the investor founders model, where these independent validators from the educational background of audit, finance, M&A, investment analysis, and computer sciences can be part of our ecosystem and validate ideas and even approve or reject the funding proposals between founders and investors. So in a decentralized escrow funding platform, the money of the investors is stored in escrow, and the subject to the founders regularly reporting their financial updates, the roadmap updates, their milestone achievements. The independent validators on a subject matter experts on an ecosystem, whom we issue NFTs, or in future we are going to use soul-bound tokens, can actually verify whether the proposal is right, whether the money they have been issued in the previous funding is well spent, and based on that they will approve on a majority consensus yes or no to the proposal. That way, the best of the projects which actually do performance reporting, which is completely absent in the Web3 space or mostly in the Tier 1 VC space, the investment DAOs, the investment clubs, the decentralized VCs, or the small minor hedge funds, which actually manage less than $1 million, $2 million, will have a tool to actually have oversight of the founders and their performance. And for the founders, onboarding our platform, get a validation ratings project scoring system from independent validators who will actually validate the idea is good enough or not, will actually give them a credibility to raise further funding from the investors. So if any one of you is actually from the fields of, specifically from the fields of audit, finance, top management analysis, investment analysis, mergers and acquisitions, or even computer sciences, developing computer sciences, are welcome to go to our CASK website or scan the code here to join our Guardian program. And we are launching our alpha version in the span of 2 weeks right now. So join a part of a testnet and also get rewarded in CR2 tokens. But we want to expand this use case to all the industries possible by way of other coming products in future. So stay tuned to CASK Web Finance. Thank you so much. Thank you very much. If you have any doubts or queries, I'm open to that. And wish you all have a good evening, and we'll see you back. Happy to see you all tomorrow at our platform outside, CASK Web Finance. We have a booth outside. You're welcome to questions and everything. Thank you. Thank you very much.
Once again, thank you, Mr. Yas. Thank you very much for speaker with the topic of decentralized audit and arbitration based on proof of expertise. Okay, as we move on down to our final topic of the day, which is option business unit, we'd like to welcome our speaker, Mr. Hao Yang, Principal Product Director, Head of Options at Bybit. A round of applause, everyone.
Hi, good afternoon, everyone. My name is Hao, and I'll be talking a little bit about our trading products at Bybit, and especially our newly launched options platform. Okay, so let's start with a bit of history, what we did and where we are. So in the beginning, Bybit is only with inverse perpetuals, and everything's our launch of our platform, we listed more and more derivatives and spot products. For example, we launched linear perpetuals, quarterly expiration futures, spot trading, NFT markets, and recently we also launched the options marketplace. So with spot trading, we listed leveraged tokens, and you can also trade with margins on spot. You can borrow and lend with, okay. You can also borrow and lend with spots, and basically get into leveraged spot positions. And also you can trade with multiple underlying assets. For example, you can trade BTC against USDT, and you trade BTC against USDC. For our Delta One products, we listed linear and inverse perpetuals. So the perpetuals that settled with USDT, that's the cash cow of our business line. We're trading against around 10 billions every day. And we also have the inverse perpetuals, which is basically the most innovative products of the crypto trading marketplaces. We also listed options in April 25th, and that's the only place where you can trade a well-built linear USDC settled options. So the difference between our options product line and the most popular options product is that we settle and margin everything with USDC. We're guaranteeing the stability of the underlying settling assets. So instead of concerning about inverse options where your margin and your collaterals may decrease in value, that such thing will never happen with us. So from a risk managing perspective, it's a lot easier and much, much more convenient for traders to manage and trade with our options business unit. And that's one of the major improvements we think that we can offer to the options trading community within crypto. So we did a lot of things to trying to build a legit and functional options product. For now, there is only one exchange that captures 90% of the entire options trading venue. we're aiming to compete with them by offering a much simpler and with eco-efficiency trading system. This is the most sophisticated from a technical IT perspective, also from a product design perspective, the product we have ever offered and ever launched. That demonstrates our expertise in designing financial products and our expertise in getting the IT system right. And we listed the options and settled it with USDC instead of USDT. So in that way, we're guaranteeing the more stability when options expires and settles. We believe that USDC, from a stability perspective, is much more suited for a linear options product. Obviously, when an option settles with stablecoins, much more easier to understand and manage compared to when trading options with a Bitcoin against Bitcoin options. Also, we launched the options system within the same account system. For example, when we list Ethereum options, that's on our timetable, we're now offering only Bitcoin options. When we list Ethereum options, it will be in the same account system. So basically, Bitcoin options can offset with Ethereum options from a P&L perspective. That also increases the capital efficiency comparing the major product offerings you have in the market right now. Also, we are launching a unified margin system. That's our next major improvement and product offering to the crypto market. So basically, you can trade USDT and USDC product lines, options and perpetuals, while using Bitcoin or Ethereum or Solana as collaterals. So for option system, it's important that you can have risk offsetting portfolio margin. Obviously, we can offer that. And it will be launched in this month, in the 15th of June. So when we launch it, we will be one of the only marketplaces you can trade options with great capital efficiency. And also, when you trade with portfolio margin, you don't want to get liquidated and all your positions will be gone in one go, right? So we also launched a partial liquidation system. And we're trying to implement that partial liquidation system into our entire product line. That will further increases the capital efficiency and help traders to manage their position much, much more easier and make the entire marketplace much more organized and less volatile. So basically, when a margin is above a certain level, we will gradually reduce a trader's position one step at a time. So for example, if your margin level is above 100%, then we'll try to find out the most risky position and we'll reduce that and not one single bit to reduce your margin level from 100% to 90%, and then we'll stop. We did this with extensive quantitative back testings. We pulled the data from the last 3 or 4 years. We stress tested with the most extreme event that happened within crypto, like in 2019 and 2020, like the major Bitcoin cascading liquidation. We pulled the data off and we tested with our build, the financial logic, and we can guarantee the entire market that our partial liquidation and portfolio margin system will function as expected. So this is a bit of our timetable. So on the 15th or the 25th of April, we launched our options product. We just launched our daily options. So we have now 7 expiry dates with around 20 strikes within each expiry date. On the 15th of June this month, we'll launch portfolio margin. Basically, that means every single traders will be enjoying the risk offsetting characters of our margin system. We'll also launch a yield-generating structured products. The yield-generating structured product, for example, you can see the Ribbon Vault, and they're basically selling covered puts, covered calls, and put sellings. I believe when we launch it with a CeFi platform, we can offer our users a better yield because we can basically trade it with much greater efficiency. You don't have to care about all the gas fees and liquidity when you're trading in a decentralized exchange. In CEX, the efficiency is much greater, and then we can offer a better yield. And in the 10th of July, really soon, we'll offer full cross-collateral margin. That basically means you can trade USDT and USDC products with Bitcoin and with Ethereum as collaterals. That's one of our major innovations and major capital efficiency improvement that Bybit is offering to the crypto market. Also, Ethereum and Solana options is our timeline as well. We expect to roll them out in August. In September, we'll be enhancing our portfolio margin. We even considered about risk offsetting between Bitcoin and Ethereum, which has never done in crypto. But that was a quite common character in traditional finance. When we did that, we will be the only marketplace where you can trade with the greatest capital efficiency. Talking about next level, so multi-collateral cross-margin and portfolio margin. Help traders to increase their capital efficiency will be our major focus. We aim to be the infrastructure where trading happens, where value discovery, price discovery happens. And in order to do that, we'll help traders to increase their capital efficiency, to greatly reduce the capital required to open and to maintain a position. To achieve that, we will be enabling cross-margining. So for example, as I talked, using Bitcoin, Ethereum, Solana as collateral to trade products, and also risk offsetting between different derivative products, and also portfolio margin, a true portfolio margin system that across different risk units. That's all on our timetable, or our product roadmap. What we're trying to be the trading infrastructure of the entire crypto ecosystem. That's all I want to talk about today. Thank you, and thanks, and welcome to Trade with Bybit.
Big round of applause once again. Thank you, Mr. Hao Young. A round of applause. Thank you once again, Mr. Hao Young, Principal Product Director, Head of Option at Bybit, with the topic Option Business Unit. Okay, ladies and gentlemen, with that, we have come to an end of our topic, a panel discussion, and speakers right here at the conference hall. Give yourself a big round of applause. You guys have been really wonderful, staying throughout the whole entire day, learning a lot of knowledges. Hope you guys all learned a lot. All right, you guys did learn, right? Okay, you learned a lot, but the only time when I ask something, you guys respond very less. All right, as long as you guys have learned a lot, thank you very much. Hope to see you guys tomorrow. So if you're here, come and see me, talk to us, everyone. Any question, once again, we have the booths outside. So you guys can go and consult with them, talk to them. And of course, all the speakers are all at the front too. So you can talk to them and consult if you like to know more. Of course, question them too, all right? So once again, thank you very much. Thank you. And I'll see everyone tomorrow. For those of you, if you're leaving, please drive home safely. If you're commute, please take care of yourself, okay? See you all tomorrow. And goodbye.